And you are on, sir.
Okay, I would like to call to order the Finance Committee meeting of October 4th, 2021 at approximately 5:01 p.m. Can I have a roll call, please?
Yes, you can. Sorry about that. Counselor Cassett,
Here.
Counselor Villarreal,
Present.
Counselor Lindell,
Here.
Counselor Romero Worth,
I'm here.
and Counselor Beta.
Here.
Thank you.
Okay, so we've got a quorum. The next item is approval of the agenda. Are there any changes from staff?
No changes, Mr. Chair.
Okay, changes from the committee.
Move to approve.
We have a motion. Is there a second? And a second. Can I have a roll call, please?
Counselor Cassett,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
Counselor Beta.
Yes. Okay, the agenda has been approved. Now it is approval of the consent agenda. Items to be removed from the consent calendar. Councilwoman Cassette.
Thank you, Mr. Chair. I'd like to remove items A and B, please.
A and B. Okay, other items? Councilwoman Villarreal.
Thank you, Mr. Chair. Also A and B as in boy, and item I,
Okay,
and that's it.
okay, anyone else? Can I have a motion regarding the consent agenda as amended?
Move to approve as amended.
Second.
Can I have a roll call, please?
Yes. Counselor Cassett,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
and Counselor Beta.
Yes. Okay, next is approval of the minutes, the regular Finance Committee meeting minutes of September 20th, 2021. Are there changes from staff?
No changes, Mr. Chair.
Changes from the committee? Can I have a motion?
Move to approve.
Second.
I have a motion and a second. Can I have a roll call, please?
Counselor Cassett,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
Counselor Beta.
Yes. Okay, so that brings us to item 6A, presentation, the FY20 audit presentation. Ms. McCoy.
Thank you, Mr. Chair. Mr. Chair, councilors, tonight we will be having a presentation of the fiscal year 2020 audit. I'm going to share a PowerPoint presentation. Tonight we have joining us Stephanie Woodruff, the chair of the Audit Committee, and she will be doing the introduction for us. The City Finance Department staff is also joining us, as well as Raul Anaya, the principal with Clifton Larson Allen, the city's external auditor. And then we also have joining us tonight, Tom Friend and Rochelle Aguan from RADW that have been assisting us with the fiscal year end audit. That being said, I'm going to just give a brief overview for us of what you'll see tonight. So since 2017 and the publication of the McCard report, we've been working very diligently on improvements to make our financial accounting and operations not only more professional, transparent, but also more modern and accurate. As we'll be discussing with you tonight, FY20 was the first year of the implementation and the use of our new Tyler Munis accounting system. So the McCard report identified different areas where there could have been fraud and abuse, and through direct action, we have systematically been cleaning up those various areas. As identified in the FY20 audit, the city's financial house is strong, safe, secure, and in order. As staff will review with you tonight, the city's net position, our fund reserves, and debt administration have improved over the last few years. This has been accomplished, of course, through prudent fiscal management, including managing our way through the financial uncertainties that COVID did present. The financial statements received a clean opinion from our external auditors, and Raul will just go into more details on that shortly. With regard to our findings, the city has identified corrective actions that are outlined in the audit document that was posted alongside with the packet of information as soon as it was released today by the state auditor's office. So we will be taking those corrective actions to address the findings and improve the performance of the city in these areas going forward. In terms of the current fiscal year 21 audit, our staff will also review with you what is currently happening, what's currently underway, and the steps we have taken to expedite the preparation. The following presentation will, of course, outline the FY20 summary, as well as areas to highlight on fiscal management and the financial shape of the city. With that, I'll turn it over to our city's audit chair, Stephanie Woodruff.
Sorry, can you hear me okay, you guys?
Yes.
Yeah.
Okay, I got kicked off, so now I'm on my phone. Is that all right? Okay, good to see everybody, Chair, council members. Thanks for having us tonight. Exciting day now that the FY20 audit has been released this afternoon by the OSA. We're very happy and very excited that we're finally at the finish line for the FY20 audit. Before we jump into the results, I want to give everybody, just for those folks on the call tonight who don't know a little bit about me, a little bit about my background. I've got about 35 years of corporate governance, internal audit experience. I've been serving in this role since the end of 2018. My 3-year term actually expires next month, but I will be happy to continue in that capacity if so be. I played this role prior at the city of Minneapolis. And prior to that, I've spent many years at Deloitte & Touche and Cargill Incorporated in the worldwide audit function. So I've been all over the world. I've seen a lot. I know that the city of Santa Fe has been through a lot in terms of kind of rebuilding the internal audit function, really starting from ground zero. Not only rebuilding the function, but also implementing a new ERP system, which was, an enormous task. And not only implementing a large ERP system, but then also being faced with the challenges of the global pandemic over the last 18 months. So, a lot of the folks in the IT and the finance and accounting staff didn't even have laptops. So they had to, we literally had to equip everyone from the beginning to make sure that everyone could work remotely and be safe. So I'm very proud of the team. I'm very proud and very appreciative of Director McCoy and the entire staff and what they've been able to do over this past year. So Mary, do you want to advance the slide? There you go. So I want to talk a little bit about, the purpose of the Audit Committee, because it is fairly new. In my role as an outside independent director, we're really tasked with advising the city manager, the finance committee, and the governing body regarding, all of the audits, the external audits, which we have today, any outside assessments and any special investigations. I think we've come a long way over the last couple of years, especially during the pandemic. We have met remotely. And I feel confident with our new partner in REDW as our outsourced internal audit partner that we have an incredible team and that we're now starting to see and starting to leverage a lot of their knowledge over the past few years, and working more closely together with our external auditors so that this process can be more cohesive. And I have confidence that a lot of the issues that they have brought up, that then we funnel those issues back into our internal audit risk assessment so that we're able to, stay ahead of a lot of these issues and address, the ongoing risk associated for the city of Santa Fe. Next slide, please. So I want to talk about this before we jump into the results, because there's been a lot of, I think, misinformation regarding, the results of the financial audit versus fiscal responsibility, and what does that mean when it comes to financial health. The financial audit is truly the independent examination of the financial statements, right? And that process is done on behalf of the OSA. Clifton Larson Allen is the outside external auditor that is tasked with that responsibility. That process, yes, is due by December 15th. And yes, it is true the last couple of years we have been delayed due to various issues, whether it's the new system implementation, staffing shortages, the pandemic. I mean, a whole host of items that we have, communicated from the very beginning, and the OSA has been, by our side in terms of, looking to us and agrees that the delays have been warranted in terms of some of the challenges that we've been tasked with. Now, fiscal responsibility is really, the decisions that the council and the mayor and this administration, take in terms of, positioning the city for a very, positive financial health that the city has been faced with. It's been an enormous challenge over the last 18 months, given the pandemic. But I'm very proud of the fact that the administration and all of you council members need to pat yourself on the back that the city truly is in a strong financial position, a strong financial health and the balance sheet moving forward as we continue to address the challenges through this pandemic. Next slide, please, Mary. So, the challenge here is, you can have poor audit and you can have poor financial results. You can have a poor audit, yet have good financial results. You could have a good audit, meaning it's on time, it's a clean opinion, yet have poor financial results. Or in this case, the city is, finishing out the year with an unmodified, clean opinion of the financial statements, and we have good, positive financial results. So, I'm very proud of the fact that, even though it took longer, our communication has been with the OSA on a weekly basis. When we thought back in December, back in February, the OSA agreed with us that it was prudent and it was the right decision to basically take a step back and make sure that all of the issues that we were finding with the system, with the mapping issues, with a lot of the accounting errors, that we took the time and corrected those. That in itself is prudent because good governance is good business. Any of the noise that's been in the paper regarding, any comments that this administration or the city has been irresponsible, not fiscally responsible, is just not true. I think what you'll find in the results that Director McCoy and CLA will present, that, we are positioned very well, especially out of this pandemic. And not only that, but the CARES money that we had to account for in less than 3 months, all of the challenges that we've been faced with. Really, if you go to the next slide, Mary, if you look at really where we started from back in 2017, when the McCard fraud risk assessment report was done, huge issues, right? In terms of failure of any type of internal audit function, failure of any really adequate external audit function, and overall, the lack of internal controls for any processes, which opened the city up for huge fraud risk and challenges. So, it's been painful. It's been, a little bit of a rocky ride, but I'm very confident. I'm very confident in the team. I feel very comfortable that come the 2021 audit that we are on track, and that we should have no issues meeting that December deadline. And, like I've always said to the Finance Committee, that I've always been involved. My door is always open if you guys have any other detailed questions to further educate, because, this for the city has been not just a process of implementing internal controls, but it's a huge change management process. And that does not happen overnight. It takes years. I've seen it all in my global experience with Deloitte & Touche and with Cargill, and with the city of Minneapolis, all over the world. These things take time. And I feel confident that we are building the right team. And I'm excited for the rest of the year to finish out 2021 in another positive note. So I'll hand it over to Mary here to talk about kind of, where we're going now moving forward.
Thank you, Chair Woodruff. Appreciate you taking the time out to join us this evening. Did want to highlight the fact that the McCard report recommendations highlighted that the city needed to prioritize what our steps were going to be to start the cleanup process, to implement a logical, meaningful, and cost-effective corrective action process. So in an attempt not to implement too many recommendations at once, we did have to prioritize. So what have we done as a city organization in the time since the 2017 McCard report? Stephanie spoke earlier about the times that she's come in front of the Finance Committee previously to present both the recommendations on hiring an internal audit firm, which we've selected RADW, as well as the 2018 risk assessment and several internal audits subsequent to that, the 2019 procurement and AP audit, internal audit, the 2020 leases and lease accounting audit ahead of the implementation of GASB 87, and 2021 public utilities and billing audit most recently. So those are areas where the city has heeded the recommendations in the McCard report and taken swift action to correct the problems that were identified by hiring an independent accounting firm to assist us with that. Similarly, with our external audits, the McCard report did identify that various times the city of Santa Fe has changed audit firms, but some members of the audit team had not changed and had stayed on the city's financial statement audit engagement. So those individual members of the city audit team, as identified in the McCard report, had remained the same for multiple years, which they identified leaded to a level of familiarity and complacency that could potentially result in missed findings. So what the city has done to correct for that is we have actually issued an RFP for audit services. And after that competitive bid process, the city did award the audit services contract to Clifton Larson Allen. So Raul Anaya with CLA joins us this evening. The IRS, some other audits that we've performed, very rigorous audits in the last few years. IRS audits for the calendar years of 2016 and 2017, we did present that to the committee last year. Lodgers tax audits that were performed by CLA, as well as a performance audit of the police department that was previously performed. Additional areas of concern that were identified in the McCard report were areas around internal controls. So the city's corrective action, again, to heed the McCard recommendations, was prioritized. We've prioritized these 5 different policy areas. Modernizing our accounting system, we'll go into some more detail about this new accounting system in future slides, but the new system ensured that the audit trails were turned on, ensured control over computer rights access as a role-based system, including our 3-way match process, and also established a centralized repository for contracts, purchase orders, and other documentation. So being able to implement both the financial system as well as the human capital management system was a pivotal central role in modernizing and improving after the McCart report. We've also reorganized the finance department, so no one person was responsible for all the revenue coming in or the payments going out. We've hired professional staff, some of whom will be presenting to you today. They have 20 plus experience in these key roles as CPAs or CFAs or CPOs. We've also updated policies and procedures, including a cash handling policy, procurement policy, P-card policy. We're in the process of updating our grants management policy. We've also established several desktop manuals to accompany the new accounting system that was implemented in fiscal year 20. We've also developed trainings for our staff, including trainings over the year-end close process that we have successfully been able to conduct via Zoom as well and transfer to this virtual environment that we've been in. Trainings over procurement, cash handling, budget, grants, trainings in our Munis financial system and human capital management system. So total for that system, over 200 trainings. And this is, very key to be able to ensure a successful launch of a new system. That being said, we do recognize that we've had several challenges with our FY20 audit. So I'm going to ask Alexis Lotero, our Assistant Finance Director, to take us through the next few slides about these challenges and the corrective action that we're currently underway.
Good evening. Thank you for having us. So in the McCart report, it identified that we had a very antiquated IT system, and internal controls were a real issue. And, when you read through the history of the audits at the city going back decades, it's been an issue that the people who, they can take a transaction all the way through the process, and that violates all the standards for internal control. FY20 was the first year that we implemented and used Tyler Munis. And that being said, it had its challenges. Anytime you bring on a new system, you're going to meet with, we had to train all staff. We had to create new processes. We had to document them and actually just get employees on board that this was something that, was going to help us long term, and it was something that we really needed. And as far as the technical challenge, the major technical challenge, I would say that's really glaringly obvious in the audit is around project ledger. So when we implemented the Munis financial system, we weren't aware how critical using project ledger would be. Project ledger allows us to take things like grants and break them apart. So when the audit was being done this year, that was a very manual process. When we use project ledger, we can identify, using these project ledger codes, we can identify different grants. This also helps us with capital projects. So we can identify specific capital projects down to, very specific items within the project ledger codes. The third issue, I'm sorry, I'm getting a little off track, was the chart of accounts. So we took there was a major change with the chart of accounts. So that made the migration from the old system into the new system. It wasn't apples to apples. So some things were consolidated and some things were different. And a part of that, it was a challenge systemically, but it was also a challenge in training, because we would talk to staff and, it was this way in E1. Well, we have a new system and it's changed and it's different now, and it's a better tracking system. It's more modern. And as we go into the new system, I've been told by Patrick Lucero that we're going to like it even more. Next slide.
Thank you, Alexis. I think it's also really important to point out at this point that with a major implementation of a new system, several of us worked at the state during the state's share implementation about a decade and a half ago. And so we've outlined for you here some areas where the state also had some significant challenges in closing the fiscal years subsequent to the share implementation, and similar multiple findings throughout that period of time.
COVID-19, the pandemic, brought multiple challenges. The first challenge I would like to talk about is that, we immediately sent everyone remote, and we didn't always have the equipment. And I know that Stephanie addressed some of these issues, but that was a big change for everyone. And I have to commend our staff for pivoting exceptionally well. The other issue associated with that was that we had a 40% vacancy rate. So we're not only expecting our limited staff to pivot to a remote environment, but we also have a very high vacancy rate. And we had various people within the finance department and other departments who actually suffered from COVID. We also received $17.5 million from the federal government for CARES Act funding, which had a very, very short time frame for receiving and spending, which we managed to do within the deadline, and it delivered necessary services to people who needed it truly in the city. Another issue is that key staff left the city during this period that the audit work was being performed. We had a sudden departure of our accounting officer, and when she left, she also took a great deal of knowledge with her. All of these things also with a late audit from 19 also delayed us going into preparing and starting to coordinate our efforts for the FY20 audit. Next slide. Corrective action. So we're being very proactive for FY21. We've already started our year-end close process. We've already completed the areas of budget, procurement, and payroll. During that budget approval process, we received $500,000 to assist us to hire CPAs to help us in this effort so we can focus not only on preparing for the audit, but also the current year activities that need to continue. During the budget process as well, we received funding for several previously frozen finance positions. We've hired an AP supervisor, a grants accounting analyst, and we've at this point posted the positions of accounting officer, budget officer, and accounting manager.
Thank you, Alexa. So that really brings us to reviewing the city's financial performance. And Stephanie, the chair of the audit committee, did an excellent job earlier at identifying the differences between financial performance and fiscal responsibility, and what those were defined as. So I'm going to turn it over to the city's controller, Clayton Pelletier, to review the city's financial performance and net position.
Excuse me, Director McCoy. Councilor Lindell, your microphone is not on mute.
I may have the capability. Okay, there. I was going to say I may have the capability to mute it, but she did.
Thank you.
Good evening. Thank you, Mary. I want to go over the portion of the financial report regarding the net position of the city. I'll jump in for some other issues, but this is what I'm going to cover first. If any of you want, I can tell you the pages of the actual report that this refers to, but what you're looking at right here is a snapshot from the management's discussion and analysis portion of that financial report. But it does tie directly into the financial statements of net position prepared for this presentation. The net position of the total city increased from FY19 to FY20 by the 13.5 million. All these numbers I'm telling you are FY19 to FY20 comparisons. When you add up the governmental activities of 5 million and the business type of 8.5, that is going to total your 13.5 million. This is on a total city approach to looking at the net position of the city, which is the excess of assets over liabilities, to tell you what strength, the financial health that the city is in. So that's just a real quick overview of this area for you. Thank you.
Thank you. Thank you, Clayton. I appreciate that. Next, I'm going to turn to Bradley Flitch, the city's planning and investment officer, to review the debt administration.
Good evening, everyone. So the city is in a really good position, as you know, by our rating agencies. You know, AA+ by S&P and AA+ by Fitch. The water system is AAA by S&P. Currently, we have 19 million of general obligation debt outstanding. We have 79 million, almost 80 million of debt backed by gross receipts tax. And then we have about 97.6 million of debt on our enterprises. And then about 36 million, of which most of that is Midtown Campus. You know, 22 million of that is Midtown Campus on the loans. General obligation bond, as you know, that property values in Santa Fe have been going up. Currently, the taxable assessed value of the city is just over $4.5 billion. And the city's debt capacity on general obligation bonds is 4% of the assessed tax value. And that's roughly $181 million of general obligation debt we could have outstanding at this point in time. Currently, we have 19 million. So we have substantial capacity in general obligation. On the GRT debt capacity, we typically look at that not so much on how much debt is outstanding, but how much of our pledged revenues are we spending on debt service. Currently, we're spending approximately 25 million in annual debt service of our total pledged revenues of 65+ million. This gives us a coverage ratio of well over 2, which is, you know, almost 2.5. And so that's one of the major reasons why we have such a strong credit rating. Thank you, Mary.
Thank you, Brad. Can you also review with the committee members the significant savings through the administration's refinancing of debt over the last few years?
Well, thank you. Yeah, we're in the process currently of refinancing the 2010B and the 2012A bond. That's going to save the city roughly $330,000 a year. Refinancing of the Midtown Campus saved the city roughly $500,000 a year in interest expense. We've also refunded the 2010 general obligation bond, and that one was saving the city roughly $50,000 to $60,000 a year. We also defeased and paid off the 2008 GO bond. And you'll see that in 2018, which add an enormous savings to the city. And you'll see this here in a chart later on. And there it is. And so when you look at the general obligation debt per capita, and This is based on the most recent 2020 number of 87,000 population for Santa Fe. You can see that there's a definitive trend lower in our general obligation debt per capita. You can see that that trend is also true in the total debt, and that would be all general obligation, all GRT, senior and subordinate lien, as well as enterprise and loans to from NMFA. But there's a distinctive track that the city is, managing its debt and moving it lower.
Thank you, Brad. I think we're going to move forward now to capital asset administration. And I think what's evident in these last few slides, we can see from our total net position and the changes, positive changes in our governmental activities, as well as our business type activities, to the 200 million or over 200 million that we have in outstanding debt, the complexity of our financial system. Our Tommy Chavez, our acting accounting officer, is going to review the capital asset administration. But here again, this reviews the level of complexity of of the city of Santa Fe's financial system, with over 700 million in both governmental and business type activities and capital assets. And just as a point of reference, when we were doing a bit of a research project to take a look at the city's financial performance and the city's audits over the series of the last 40, 50 years, we have all those audits on record in our office. It did become very quickly apparent that the city has really grown in leaps and bounds over the last 40 years. The audits actually in the late 70s and early 80s had significant challenges and significant problems. One of the years in the late 70s, they were not actually tracking capital assets in the financial system at all. So that was a very significant finding for the city of Santa Fe at the time. In the early 1980s as well, there were a series of years that the city had qualified opinions because of the lack of use of general ledger or other significant issues that they were facing at the time. But with that, I think I'm getting sidetracked. With that, I'll turn this over to Tommy Chavez, our acting accounting officer, to review with us.
So here we are talking about the capital assets for ending fiscal 20. We have a total amount of assets for $734,452,715 total, which includes both governmental and business types. Looking at the comparison from fiscal 19 to 20, we had a 1% increase, which kind of stayed at the same level. We didn't have a dramatic change to that. Some of the major capital assets during this fiscal year, which we still have in construction in progress, total 39 million. Of that, we do have the difference between that is the governmental type and business type. What I have estimated 7.8 million actually belong to the governmental activity there, and 31 million is the business type activity, which we still have in progress. So in this basically concludes everything from every department, from street paving to park improvements, building renovations, you name it, and so far. And if anything is still pending, we probably will carry it forward and reevaluate it through for fiscal 22 for the current year.
Thank you, Tommy. With that, I hope we're able to demonstrate the complexity of the city's financial system, the challenges that the city has faced in the last few years, and our corrective action that we have actively managed in the last few years, as well as what we plan to continue going forward. With that, I'll turn it over to Raul Anaya with Clifton Larson Allen, the city's external auditor.
Well, Mary, thank you. Hello, Councilor Beta. Finance Committee. Mary, can I share my screen, or were you going to share my slides?
Go ahead and share. I think you have the ability to share.
Okay. Okay. Hello, everybody. My name is Roland. I was the external auditor, the audit principal for the audit for the year ended June 30th, 2020. My name is Roland. This is my second year working in this role as the audit engagement principal. I've prepared a small or a presentation to kind of go over the audit results. As Mary and her team went over already, they went over the financial results. I'm just going to go over the results of the audit and go over some key terms. First, audit opinions. It's important to note that my responsibility as an outside external independent auditor is to issue an opinion on your financial statements. The actual financial statements are the responsibility of management. Our job is to go in and conduct test work to say if those numbers are fairly presented and accurate. We're happy to say that we got to an unmodified opinion for the financial statement audit. That's the cleanest opinion that an independent auditor can give. That means we believe the numbers contained in the financial statements that were released today are an accurate and fair representation of what occurred during the year. In addition to reviewing your financial information, we also are engaged to look at your compliance with major federal programs. The city of Santa Fe receives numerous federal grants. Our job is to go in and look at those to make sure the city is following proper federal compliance with those grants. We tested two major programs this year, the CDBG and the Airport Improvement Program. The CDBG program had a clean, or this is actually a misstatement here. The CDBG actually had an unmodified opinion for all compliance, and the Airport Improvement had a modified opinion for one material weakness that I will go over later in the presentation. Audit results, this is a summary. We had 43 audit adjustments and reclassified entries. What this basically means, the trial balance we received to what was actually presented, it took us 43 audit entries to get to where we felt the numbers were a fair and accurate representation of what occurred. The city posted all those entries and we worked directly with the city to make sure that those numbers were accurate and fair. Findings summary, we had 21 total findings. Of the 21, 8 were material weaknesses, 10 were significant deficiencies, and 3 were other findings. It's important to note that material weakness is the highest level of finding that an auditor can give. That means we believe if undetected could eventually lead to a material misstatement in your financial statements. A significant deficiency is less than material weakness. We just believe that if those aren't caught or combined together could eventually lead to a material weakness. And then 3 other findings, those are items that are required to be reported under the Office of State Audit rule. It's also important to note that while there is 21 total findings, there was 8 findings that were resolved from 2019. We had new findings, but there was 8 findings that were cleared by the city during our fiscal year 20 audit. And actually, Councilor Abeda, I've actually included the 21 findings. Would you prefer for me to go over one by one, or I'm at the liberty here of the Finance Committee of how they would like to proceed?
Yeah, let's go through them.
Okay.
That's our job, so.
Okay. And these are all included in the financial statements that were issued today. So the first audit was finding number 2020-01, errors in preparing the CFA schedule, the schedule of expenditures of federal awards. During our review of this schedule, we were presented 7 different versions of what the city's actual federal expenditures were. The initial report had 6.9 million, and the final report that was eventually included in your audit included 4.1. We believe this was attributable to the transition from E1 to Munis. It was a mapping issue that was identified that wasn't correctly capturing your federal grants. So our course of action and responsibility is to make sure that mapping is correct and make sure the city captures their federal grants appropriately to make sure that they're reporting what they actually received and expended during the year. The next one, just over general internal controls over financial close and reporting. The city has made improvements in this, but there's still lack of overall internal controls over the financial closing and reporting process. A proper financial close and reporting process will properly close your books after year end and then be able to allow for a proper and timely audit and include less audit entries than we had overall. So our recommendation is to continue to work on that close. I believe the city has a plan and is continuing to work on that, and will show improvement in the subsequent year. The next one's related to federal revenue. This one's an important one to me. The city gets federal grants, and most of the grants are on a reimbursement basis, which means that the city expends the money and then submits reimbursements to the federal government for reimbursement. As of December 31st, 2020, when we looked at some of these items, a period of 6 months after year end, there was no reimbursements made on numerous federal grants. And on the bottom, you can see some large ones that total over close to $4 million. So, or $1.9 million. Our recommendation is to make sure that anytime that there's federal expenditures, to make sure that those are billed to the federal government in a timely and appropriate fashion to make sure cash flow is not ever an issue with the city. In addition, during our confirmation parties with the third party, we know the city had a grant of $191,000 that was eligible for the fiscal year 20, and to our records and to what we could see, the city did not utilize that grant. So that just grant money that was not used at all. So that's money that could have went to a city program or helped a city initiative. This next one's really related to the E1 and Munis system. We noted there was multiple journal entries, and just for the committee, journal entries are deemed items that are directly entered into your accounting system. It's standard internal control process that any journal entry that's entered into your system is properly reviewed, has proper support, and is properly initiated. If one person's able to enter a journal entry that's not reviewed by somebody else, it can lead to misstatements and an override of your general internal control. And we noted that there was a lot of, during the beginning of the year, both the E1 system and the Munis system was operating, so there was journal entries going in both systems. And in some cases, we saw that there was entries taking activity from the E1 system to the Munis system that weren't properly reviewed. We know that some of those entries posted in the Munis system, if they were properly reviewed, would identify errors in the transfer of some data and would have probably improved your financial close process. They also noted that there were some payroll accruals that if those entries were posted correctly and reviewed appropriately, they would have it would have led to a easier reconciliation of your payroll accounts. And then lastly, your pooled cash accounts, there's a default in the Munis system to balance an account. Anytime you post a journal entry, you need a debit and a credit to offset each other. The Munis system automatically, when there's not an offset account posted, will automatically default to your pooled cash system, and sometimes creates unexpected or unwarranted calls for cash in the pooled cash account. So our recommendation there is just to make sure to monitor those and make sure that accounting staff knows that the only entries to pooled cash should be actual cash entries. The next one's over capital assets. The big one here is we just had multiple items with capital assets and construction and process. We had multiple versions of the schedules provided. Our first schedule provided by the city contained and stated that the city had 0 construction in process during the fiscal year 20. That was eventually changed to, I believe, $30 million. So it was just making sure the city has a record of what that number is and a detailed listing of all their construction in process. That list was eventually put together and we felt comfortable with it. It just took us a journey to get there. So making sure that's timely and kept accurately will be important on a go-forward basis. The next one's related to accrue liabilities. We noted when we first started the audit, there was accrued liability balance of $8.5 million. And these were related to what were labeled as payroll liabilities. That number is a number that's a lot larger than in years past. So our first thing is we made sure that there was no outstanding payroll liabilities that the city hadn't paid to PARA, New Mexico Retiree Healthcare, or IRS. Those all had been paid. There was just a delay in some of the PARA payments for the month, and that was related to the MUNIS system. So overall, we were able to get comfortable with it. It just took a lot of reconciliation and adjusting journal entries to get us there. But overall, we got to a balance that we felt comfortable that the balances were recorded correctly. It's just the initial trial balance provided to us as auditors was obviously incorrect and didn't actually reflect what was actually payroll liabilities at year end. The next one's over allocation of investment income. The city uses pooled cash for different funds. We just noted that the allocation, was correct in some funds, wasn't correct in all funds. There were some funds that, while they had a cash balance and had an accurate and valid pool on drawn cash, weren't being allocated investment income according to their cash balance. So our recommendation is there just to make sure at year end to look at that cash balance and follow your own policy to make sure that every single fund is receiving their proper allocation of investment income, which in this case is interest income. Controls over cash balances. This is just related to cash reconciliations. Cash reconciliations and bank reconciliations are a key part of your internal controls. We noticed that there was a cash reconciliation done. We compared that to the trial balance, and the trial balance had a different balance. We also noted that the city gave us a reconciliation that had a list of outstanding checks that were subsequently voided, which ultimately reduced the proper cash amount on your trial balance. And then we saw that there was a recorded cash balance that hadn't changed from the previous fiscal year, meaning that nobody had actually reconciled or adjusted that for the fiscal year 2020. So just extra emphasis on making sure cash reconciliations are done appropriately. Interfund activity. We noticed that there was some interfund balances and receivables that if you got all the funds together for the city didn't balance. Anytime you have interfund receivables and balances, they should equal each other. We were able to get them to balance, but the original trial balance, they did not balance. And then we also noted there were some receivables and payables from the prior fiscal year that had not been properly liquidated in the current year. Controls over debit accounting. Last year, this was a material weakness. We were able to reduce this because the city made significant progress here, but we did note this year the city recorded duplicate payments on one bond series that was not identified during the bond reconciliations performed by the city. And then the city did not properly account for a new bond issuance in recording the refunding for outstanding bonds and the unrealized gains and loss on that bond issuance. Controls over accounts payable. The big one here is we noted that the city, while they had accounts payable, the city was not able to present a detail of accounts payable by each fund. Each fund should have a detail, a balance of what the accounts payable is made up of, which includes specific invoices at year end to show what is actually payable. This reconciliation was done at the citywide level and not the fund level. It's important the city reduce that to the fund level to make sure that we have an accurate representation of each fund's responsibilities and payables at year end. Controls over compensated absences. We just noted in the old E1 system, I think it was noted in Mary's team's presentation that E1 system was a very antiquated system, which did not allow for proper as compensated absences. There's various rules. You can only accrue so much for different personnel. That system was not able to handle that. The MUNIS system is able to handle those limitations, but not all of that was inputted during or before year end. So we just noticed that the compensated absences in the system was not calculating correctly. And then the big one that we noticed here on the end, you see bullet 3, is that there was an employee that left the city and they were overpaid their annual leave because the system didn't calculate correctly. This employee received over 200 hours that they were not entitled to under the city's policy. which amounted to about $8,000 of overpaid leave for this employee. Information technology. This is something that we identified last year. There has been some progress made on this. We just noted during our IT review of your controls that passwords, there's not a recommendation for, there's a recommendation for longer passwords, but it was noted that repeat passwords can be used after 3 tries, and that the same numbers and complexity aren't required changes. So we just request or recommend, not request, that the city look at their passwords to make sure that they're strong, and to make sure that inappropriate users aren't allowed access to your system. The next ones, these are all federal findings, compliance findings. The first one, this was noted in the previous fiscal year. We noticed that there was $12,700 expense for an expense that wasn't appropriate, that shouldn't have been a federal expense. This year, we noted that that amount had yet to be reimbursed to the federal government. So this should have been sent back to the federal government in a form of check or a reduction of a subsequent draw from the federal government. That wasn't done during the fiscal year. That's a repeat finding. Property and equipment, this is new. During the fiscal year 20, the city purchased, I believe it was a snow plow with federal funds. And this snow plow, as part of receiving federal funds, you're supposed to track on your capital asset listings that the capital asset was purchased for federal funds. So if the city were ever to want to get rid of that snow plow, they'd have to identify it and let the federal government know before disposing of that asset. The current capital asset system does not track if an asset's been purchased with federal funds. So that's just something that the city needs to work on. This is, to my knowledge, one of the first federal specific purchase items that the city's had in quite some time. So this would be a new policy that the city needs. Reporting, this is something we had last year. It was a material weakness. We were able to reduce it to a significant deficiency. The city submits federal financial reports to the federal government. In this case, this was HUD. Those reports, strong internal controls, show that somebody in the city should review them prior to them being sent to the federal government. Within the city, they were prepared and then sent directly to the federal government without any review internally. So our recommendation is to make sure that somebody within the city reviews it before it's submitted to the federal government. The next one is related to payroll disbursements. We noticed IDIS, that's the HUD, a HUD report. We noticed in the HUD report that there was a $12,400 cost. The actual support that was in the file showed a lower amount. So that's a question cost to us because we weren't sure which one was correct. The city requested the higher amount, but the support didn't have support for that amount. Program income, this was the large one that we had for CBG. This is what led to the modification. We had numerous items with program income, and I think there's a question if the city even has program income from this program. So this is a matter of the city identifying if they have program income and then properly labeling their system. If they do have federal income, which they're showing and reporting to the federal government that they do, the amounts reported aren't supported by amounts in the system, and the amounts were large enough that it led to a material weakness in the financial statements. Late audit, this is a repeat finding. The actual audit is due to the New Mexico State auditors at December 15, 2020. The audit was submitted in the middle of September. Use of vehicle logs. We received a request to look at the vehicle logs for the city because of potential misuse of a city vehicle. When we went to look at the city logs, they were incomplete, and you could not tell who was using the vehicle when it was checked out, or so there was no way to determine if there was proper use of that city vehicle because the logs used to track them under city policy weren't being used or followed appropriately. And our last finding is just under budgetary compliance. The city sets budgets, they make adjustments to those budgets. It's important that any changes to those budgets are approved. We noted that the final budget and then actual expenditures exceeded the final budget in numerous funds related to the year. And you can see from this spreadsheet where those are. In some funds, those actual overages were significant. And with that, that was a high-level description of the 2020 findings. Councilor Abeyta, is there any questions that I can answer for the committee?
Okay, well, let me first speak with Ms. McCoy and kind of see what she was thinking. And then I want to talk to the committee. I mean, we could be here all night going over 21 different findings with questions, and it's 6 o'clock. This was a lot of information. There's a lot to still be learned about all of this, and so I don't want to necessarily get into back and forth questions and answers. Like I said, we could be here all evening. There's still going to be a presentation, I believe, to the governing body. Ms. McCoy, is that correct? And then if need be, we could have an ongoing discussion at Finance Committee about these findings and the progress we're making. So like I said, I don't know that we want to necessarily stay here all night getting into, you know, each individual item. But Ms. McCoy, what was your thoughts as far as the next, what was the next phase of this?
Mr. Chair, councilors, it is written in our city ordinances that we bring the audit presentation both to the Audit Committee as well as the Finance Committee. It is the process that has already been dictated. So as we had mentioned earlier, the audit was released today. We had an indication that the OSA would release the audit today. That's why we went ahead and scheduled this presentation to have a quick turnaround to get these results in front of this body. We will also be meeting with the Audit Committee under the purview of Chair Woodruff as well. So we stand for any questions or whatever the committee wishes at this time on the best process to proceed.
Okay, thank you. So like I said, it is 6:03. We are just seeing this information for the first time. What is the pleasure of the Finance Committee? Like I said, we could have another discussion at council. We could have another discussion at our next meeting on the 18th, or we can stay here and have discussion this evening. It's what are the thoughts of the committee? Does anyone have any suggestions? Councilwoman Lindell.
Thank you, Chair. I'm not personally prepared to ask questions this evening. I would be open to the council discussion that we'll have or bringing it back to Finance on the 18th, but I really haven't had a chance to study this document and formulate any questions. However, I will say that I very much appreciate Mr. Anaya going through each one of those findings, which is, to me, that's where my questions would have been formulated from. So I think that that was extremely helpful, and they were well explained. And for me, I would be able to ask my questions at council. I won't have a vast number of questions, but I'm not prepared to ask or discuss this evening, Chair. Thank you.
Thank you, Councilwoman Villarreal.
Thank you, Mr. Chair. I actually have some more high level questions that I would like to ask tonight. I reviewed it today. We did get it late, but there are some things I'd like to get into more detail later on. But I think I had more high level questions for Mr. Anaya for tonight.
Okay, thank you. Councilwoman Cassette.
Thank you very much, Mr. Chair. I do also have some high level questions just from the presentation. I would be, obviously since it was just released today, and they said they weren't able to put it into our packet until they received it. I haven't had time to really go through the document in detail as I would like to. I do have some questions from the presentation. Again, pretty high level questions that I'd be happy to ask tonight or wait until another presentation. One thing that I would really be interested in seeing though, and this might be scheduled over the course of the next few finance committee meetings, is really diving into these findings and discussing what the action plan is to address them. And so that is something that I'd like to request, that maybe all 21 in one session would be too much. But if we're able to break those up over the next couple of months and really hear the information about how we will be addressing these findings, or how perhaps addressing them is already underway, I would be really interested in having some more in-depth conversations there through the Finance Committee.
Okay, thank you. Councilwoman Romero Worth.
Thank you, Chair. I do have a couple questions tonight. And of course, I think we can dive into this in more depth in the coming weeks. So.
Okay, well, let's just stick with some high level questions, and then as time moves on, if it starts getting late, we can move on. But I also agree with Councilwoman Cassette's suggestion. I think we should probably take the opportunity in subsequent meetings to get into details, get into the findings, and get answers to some of those. So if we can limit our questions this evening to high level, let's do that. And we'll start with Councilwoman Villarreal.
Thank you, Mr. Chair. Just wanted to first thank the staff. This is a heavy lift for various reasons that they outlined. And I do think we have to be cognizant of what was happening with the pandemic and trying to get us all functioning, working remotely. I think that's been a big challenge across the board for all of us. The other piece I think has been detrimental to every single probably department is there's been short staff. We've been short staffed, and with that has led to a lot of work being added on to other staff members, and which leads to, in my opinion, balls being dropped. So I guess when I think about all of the findings, what I'm seeing is like more of the fact that we're short-staffed, the fact that we've lost staff members, and then there's people that are having to pick up the slack, really has added to, I think, some of the problems that we're seeing in the findings. Would you agree with that, Mr. Anaya?
Councilwoman, yes, I would agree with that. I think there was numerous issues as outlined by city staff. Anytime you run into audit findings, it's usually a result of somebody forgetting something, someone not supervising something, or somebody dropping the ball. And in this case, I think that's the case, and that was amplified by, I think the biggest thing was a new system implementation combined with COVID and staffing shortages.
Right. Yeah, I think one of the things that I was really excited about when we were going through budget, and we actually had funding to support the grant management and the grant administration. I think all of us were really supportive of that. And I guess I wanted to find out more information about why we didn't get those folks hired in and put in place, given that we had CARES Act running fast and furious. And we knew that there were all these things that we'd need to put in place. And so just when I read through the findings and it looked, and you could read the staff, kind of action to ameliorate that situation, it was like hire grant manager. And I thought, well, I thought we already hired that person. So I guess I'd like to hear from Director McCoy. Did we hire people and then they ended up leaving? Or what was the case with those positions that we never got that fully put in place for grants administration support?
Mr. Chair, Councilor Villarreal, thank you for the question. I think it's really important to understand how the day-to-day operations do impact the findings that that Raul reviewed with you today. So council did approve additional grant positions. We've had extreme difficulty finding qualified applicants for these positions. As you can all probably attest to in different experiences, the grant management area is a very niche area of accounting. Because you not only have to understand the basic accounting principles, but you also have to be able to understand all of the federal rules that also apply both to compliance as well as to the grant funds. So this is an area in which we have actually gone out to post these positions several times over the last year. This position, the grant manager position, is posted again now as well. So if you have anyone that you know of, please encourage them to apply for these grant positions. We are very excited that we have brought on a grant analyst to join us, a grant accounting analyst to join us. She has been assigned the community development block grant. As Raul identified in his review, this is the area that we are very concerned about that needs immediate attention. So we are very pleased that this individual has joined us. She has great experience from working at the state and will be a great asset to the team between the affordable housing folks as well as the finance folks to be able to start correcting some of the issues that were identified in the audit.
That's great to hear. That's extremely important. CDBG, just from the limited knowledge I know, they're very complicated. HUD is hard to report to. And then to have like another layer to check that would be great. And I guess just to follow up on that, are you saying, Director McCoy, we did post those positions and we didn't get folks, or did we get folks and they just didn't meet the mark?
Mr. Chair, Councilor Villarreal, it varied throughout the different rounds because we have posted these positions several times. So in some rounds, we didn't get any applicants. In other rounds, we got applicants that unfortunately were not qualified to assume the responsibilities.
Okay, so no one was actually hired in place, and then it was basically just the pool that you were drawing from, correct?
Mr. Chair, Councilor, that is correct.
Okay, thank you. Let's see, so some of the other, I guess I'd like to understand more from Mr. Anaya. So when you found that finding about compensated absences, and that's just a quick test, right? You're taking an example and then deciding, if it was, I'm not going to get the right terms for audits, but you did a sample and then you realized there was a deficiency. But I guess what I'm wanting to know, after you did that test, and then we get these findings for that particular, it just worried me. So how do we know we don't have more inaccuracies in that area of payroll?
Sure, and that's a great question. I think what you're referring to is we test on a sample basis, and sometimes we extrapolate those errors to the population, but not test the entire population. Fortunately, for compensated absences, since that is really data-driven, we are able to test that population 100% based on what's entered into the system, and that one item that was noted was the only item that we did note.
Great, good to hear. Thank you for that. And then the bond issuances finding, can you explain to me, staff, I guess, isn't that the responsibility of our bond counsel as well? And we pay them a nice little fee there. So I'm just curious.
So, Bradley, before you step in, let me clarify that statement. Our finding was related to the accounting treatment of the premiums, what would be outside the bond counsel.
Accounting treatment of what? Say that again.
A bond issuance. So when you issue a bond, there's a proper way to record it on your general ledger. That would be the responsibility of city's finance department.
Okay. And did staff want to elaborate on that piece of what might have happened for us there? I don't know. I'm always confused about what bond counsel does for us.
Mr. Chair, Councilor Villarreal, bond counsel really advises the city on the taxability. I mean, their primary job is to certify that what we're going to do with this bond proceeds really meets the IRS qualifications for tax exempt bond issue. Of all of the things that the bond counsel does, that's the number one priority, is the certification that the bonds we issue are being used for tax exempt purposes, or we're issuing taxable bonds. Other things is to make sure that they're in compliance with our bond covenants and previous bond covenants, that we're in compliance with state laws and those types of things. But the accounting for the actual bond on the city's books is my responsibility.
Okay, thanks for that clarification and taking responsibility for that. It's a big piece. It's complicated. And so, yeah, I'm just interested in next steps for that one.
And we've done a good job. We have emphasis software. We've bought software to help do a better job accounting for it. No, and this is a widespread theme throughout the city, is that we use, I use Excel to do most of my, work papers and things for accounting. And really, we should have a system, not Excel spreadsheets. Excel spreadsheets are the absolute worst thing you could do. You should have a system that does these things for you, that's got all the internal controls and proper documentation, that whoever goes in and does something, it's documented who did what, when, and how, and none of that's available in Excel.
And
we have that system. We're moving
Brad,
towards
just
it.
to highlight the work that Brad has done, as he mentioned, he has acquired the Emphasis debt management software, and approximately 90% of the city's entire outstanding debt portfolio, which we reviewed with you earlier, has been already uploaded to that. So that particular corrective action, we're about 90% of our way there, and Brad and his team will continue to manage that, like you said, moving it into an actual system where we can track and make sure everything is accounted for.
Great, thank you. And it's called Emphasis Debt Management, the system that we're using. Is that what you said?
Correct.
Okay, thank you. The one other question, I was trying to figure out the IT finding about passwords, and I was looking at the date when it was supposed to be completed and the explanation of how long it takes. And I couldn't understand why password changes take that long. Can someone explain that to me?
Mr. Chair, Councilor Villarreal, if our IT director, Manuel Gonzalez, is on the call, he can go ahead and shed more light on that. They do have a pretty robust disaster recovery plan underway. That's one of their top 5 priorities in the IT department. They've also have a series of other top priorities that they're working on and they're focusing on. So I'd want to defer that question to our IT director, Emmanuel Gonzalez. And if he's not on the call, I'll go ahead and coordinate with him to get you a response to that very specific question.
Sorry, I couldn't find the unmute. That's fine. I think I just wanted to understand why it would take so long. And I guess I have other like little minor stuff that I can talk about later because I need to dig in a little bit more. But I wanted to ask Mr. Anaya about his experience auditing other entities. And I was just curious, had you been auditing or had you audited other municipalities in the last couple of years or last year?
Yes, I've been auditing municipalities for the past 18 years, and including locally this past year. So.
Great. And I'm just curious, like in that experience auditing municipalities, have you seen similar deficiencies in other municipalities through their audits based on or related to COVID?
I have seen delays related to COVID, and I have seen delays, especially at the state level, related to pandemic CARES related funding. But this is the largest delay that I've ran into, but this was also compounded by the implementation of a new software system.
Okay.
I can say this is the first year. This is the first year of a complete audit of the new Munis system. So this is quite normal.
So say that again. And who's speaking? I don't see you.
Yeah. My video is slow. I'm at City Hall, but I don't know why there's a huge delay. It's Stephanie. Hi, guys.
Oh, hi.
Hi, Council.
Say that
just to
again?
remind everyone, this is the first. Yeah, this is the first year of a complete audit of the ERP Munis financial package system. Even though the ERP package, the implementation started parts of it in 2017.
Yep.
But the actual financial piece, right? This is really the first year that the external auditors have had to go through a complete package of the new system. Now with that, when you go back and read the findings in detail, you'll see a lot of things like mapping issues. There were mapping errors. So a lot of that's why the overall opinion was an unmodified clean opinion, because it wasn't significant in terms of any material misstatements to the financial statements. But yeah, there were a lot of issues, a lot of cleanup issues, and they were, it's good that we find all these issues right away, so that we can clean them up and be ready for 2021.
Absolutely.
Mr. Chair, Councilor Real, could I also respond to that question?
Sure.
That was
Sure.
actually part of the presentation, and I kind of glazed over it. I was actually at DFA when they did a major software conversion, and we used the example of two big state agencies that their audits were delayed, and they had right around 20 audit findings, and they were only two of multiple state agencies. It's a heavy lift in the best of times, but with COVID and all of our other issues, it makes it even more complex. Thank you.
Thank you. I appreciate that. And Mr. Anaya, do you have any other input about like your experience and the similar deficiencies? Not just COVID, not just implementation of new system, anything else that you see that were similar in other municipalities?
One thing similar so I think there's two kind of responses to that question. So first, there's municipalities that have had little to no turnover and have a strong accounting function. And then there's what we're running into. We've had past troubles and we've had key turnover. And those both, I think, result in the audit results that you kind of run into. I think they're fixable in all things, and I think the city's on path to fix them and have identified key team members. But it's very important when you implement a new accounting system that you have a strong team collaborating amongst each other.
Thank you, Mr. Anaya. Yeah, turnover to me was the kind of what I'm seeing as glaring issue, because then it creates this discontinuity, and then new people come in, or we're still, filling those vacancies. So to me, that's like the biggest glaring piece, and then compounded by not just in finance, but other departments where we're having department heads do double duty. And I've consistently said this, and it's showing now in ways that we see folks that are having to take on more tasks as directors of like two different programs. So I'm just saying that out loud because it's frustrating to me to see it and then kind of see it how it's playing out into our audit findings. So I think I'll pause there because there's more that I'd like to get into that I need to, read a little bit more closely with the audit. But I appreciate the team presenting. I think it's good because we have this fiduciary responsibility, that having the audit in a timely manner helps us to understand what our deficiencies are, and so that we can, and the findings, so that we can actually start digging into solving them, and have plenty of time to solve them, so that we're not back into another audit cycle, and then we're not able to catch up. So I think that's really hard. It's very apparent that that's been happening. So I will pause there, and thank you all for your time and diligence for this work.
Thank you, Counselor. Counselor Abeyta has lost internet. He's trying to reconnect, and I will take over for him until he can. Counselor Cassidy, I believe you have your hand up next.
Thank you very much, Madam Substitute Chair. Yeah, just to build off of what a Councilwoman Villarreal just mentioned about staffing and a lot of directors doing double duty. And one thing that I often think about is those are the people that we see at the governing body level. And I'm curious also throughout the departments, and something that I think is probably occurring for other staff members, and I want us to be very cognizant of, especially as we move into the next budget cycle. And as we are recovering out of COVID, it's been a weird year. I mean, it's been an abnormal year with a lot of uncertainty. And so as we're moving out of COVID, I think really taking a look at our staffing capacity and our internal capacity at the city is what I hear a lot about. So, especially us as a finance committee, having that first stab at the budget, that'll be something that I will be very much aware of and really looking at as we move into the next year's budget. I did want to, though, thank first of all, it's really wonderful to see a lot of members of the finance department who we don't regularly see. So thank you all for being here, and a lot of new faces that maybe I see names and not the faces as much. So I really do want to appreciate y'all for being here. And I know that it's I know that it has been a really heavy lift, and you guys did a great job really laying out the challenges. And then I appreciate all the work that has gone into overcoming them. I don't think that they can be understated enough, that you have been working under saying less than ideal conditions is a huge understatement. So really, really tough conditions. And so, thank you to Director McCoy for your leadership, and thank you so much to the staff for all the hard work that you've put in there. A couple quick questions I have, going off of Councilwoman Villarreal's previous discussion around, is this normal? So 21 findings for somebody who does not work in the audit world or deal with audits very much can sound like a lot. And I am curious, how typical is it to have an audit with 21 findings? Is this something to be concerned about? Is this about on pace? I'm sure that it also varies based on the severity of the findings. So Mr. and I believe that this might be a question for you to first respond to, and then I'd also be curious to hear what Stephanie has to say as well, as somebody who's seen this in a lot of different areas.
Yes, Counselor, that's a good question. And to say that 21 findings is normal wouldn't be appropriate. It has happened before, and also I think it's important for me to, I'm basing this on my experience as an external auditor. There could be, Stephanie, I know has experience as well, and can also add to that. 21 items is significant. It's something that I think is important. I think the city is taking appropriate action to remedy those items. But as an external auditor, it's important that that we reduce those in the future, because I think the more findings you have, the more potential you have for potential misappropriations and misstatements. So in my observations with working with Mary and her team, they are aware and dedicated to making those reduced in subsequent years. And I think it's been well documented, the different hiccups and challenges that they have faced. So I think they're headed that direction, but yes, it's something that needs improvement. Absolutely.
Oh, thank you, Raul. Councilmember Cassett, that's a great question. And, you know, I think you have to step back and look at a perspective that it's not necessarily the number of findings, but it's the significance of findings. And once again, you know, because it was a clean, unmodified opinion of the financial statements, you could have one finding, right? Only one finding and have a modified opinion if that finding is significant. Now, looking back over the history, last year, if I recall, I think we had 20 or 21 findings. Is that correct, Raul? And we also had a clean, unmodified opinion on the financial statements, correct?
That is correct, Stephanie.
So I kind of step back and say, okay, this is, I actually view it as an improvement because last year we didn't have the full implementation of Munis. Now we have a full audit for one, so we have a starting point by looking at all of the areas that Munis has affected the financial statements, right? Now, you know, I'm glad all these issues, these mapping issues, the issues with some of the, you know, the chart of accounts, with some of the journal entries, a lot of them were errors that, you know, that we're glad that we found those. We're going to pick those up. If you look at the report, I think the management's corrective action is adequate in terms of, you know, Raul, you stated that a lot of the errors that you found were corrected right away. And I think a lot of that was, you know, the accounting officer leaving midstream also in the audit. So yeah, I mean, I anticipate that the 2021 audit will be a lot better. I anticipate, you know, less findings, but, you know, it's hard to predict. But I think with this as a starting ground, coupled with internal audit, a lot of the issues came up in payroll. We have now kicked off an HR and payroll internal audit. So, you know, we're finally working in unison where external audit looks at the financial statements and they say, okay, is everything appropriate? Is it complete? Is it accurately stated? Internal audit looks at the internal processes and the risk and controls, and eventually working in unison to ensure that we have a complete risk assessment. That's really where we're going with this entire process. And that takes time. So, I mean, I feel really good with the results. I feel good with the staff, and Raul, I can't thank you enough for your team and your commitment, especially during the pandemic. As I've stated before, I've been in this business 35 years. The very nature of audit is a collaborative process, right? It's hard to do this over Zoom. You know, it's so difficult because audit is really, you know, sitting down across the table and really discussing these issues, going through the processes and the controls, going through the financial statements. And that has been a challenge in the remote conditions that we've been in. So I applaud your team. I applaud the commitment. I know that we've been working, you know, closer and closer together. And like I said, I feel very confident for 2021 that we're going to meet those deadlines. And I hope that there are less findings. I'm more concerned about the rating, the overall rating, to make sure that there are no significant issues, that the financial statements are accurately stated, that, you know, we are being fiscally responsible to the outside. So I really don't get hung up on the number of findings. I get hung up on the nature of those findings and the significance.
Thank you so much. I really appreciate hearing those different perspectives, and you know, hearing that we are on the right track and finding some issues and being able to fix them. And again, I really look forward to how we break down the findings and start exploring them and what actions we're taking. So I really look forward to that.
Mr. Chair and Counselor, just if I can add, we have gone back and documented, again, the audits that we have available date back to the late 1970s. So, you know, starting in the early 1980s, there was a series of years, as I mentioned previously, where the city had qualified opinions over their audit. So we can go ahead and provide that listing to the council. So you get a few decades worth of historical perspective.
That'd be wonderful. Thank you. I really appreciate that too. A couple of things that came up. There was a $191,000 grant not used. Can we get some more information about, is that money that we just left on the table? What was that supposed to be utilized for?
Mr. Chair, Councilor, yes, that was money. That was a grant that was awarded to the city, but had not been utilized as of the period of review. So we can go ahead and get you more details on that particular grant and what has been used to date.
Okay, so yeah, I think that was my big question, is that since we did not use it, was a use it or lose it situation, or are we still able to take advantage of those dollars, and where are they going? So more information would be wonderful. I agree about what Councilwoman Vitarale mentioned about the grants manager position, and that sounds like that's key. We have a few positions where we have a hard time getting qualified individuals, and frequently what it comes down to is how much money we're offering based on what is being offered elsewhere. Is that potentially part of the situation? Will this be covered in the class and comp study that we funded? I know that frequently has come up with some of these positions that we post for a lot that are really niche positions or require a lot of education that we are not offering as much as other people in the area or other organizations or the state.
Mr. Chair, Councilor, yes, I think there's a salary is definitely a contributing factor, as well as just the fact that there aren't that many people in this particular niche area of grant accounting that are trained. I think both the private sector with firms like CLA, NRADW, as well as in the public sector, we're kind of competing for that same pool of really talented CPAs and accountants to assist us in this area. I think also you hit the nail on the head, right? Several conversations that we've had in front of the governing body or in front of the committees have with issues that we've had about operations, day-to-day operations, have revolved around being able to have the right classification, the right grade for the talent that we're trying to attract, often from Los Alamos or from other organizations. And so we really do look forward to working with Director Salazar's team on the classification and compensation study that the council did fund in the current fiscal year to ensure that we have the right classifications for these positions.
Okay, wonderful, thank you. Can somebody provide more information on what the governmental type versus business type is for our, I believe it was in the capital assets slide? I would love some more education on this area.
Mr. Chair, Councilors, Clayton Pelletier is our controller. I'll defer to him for the explanation.
Yes, the business type is one that's run on a full accrual business type basis. Raul, correct me if I'm wrong in this, but the governmentals are the fund-based accounting of governmental activities, and combined they make up the city as a whole, but it's a different type of fund that's used for business type activities. For instance, utilities, billing customers for a service versus providing a service without turning around and requiring payment for it. Raul, am I close here?
Yeah, no, Clayton, I think you're correct. And that's a great question. Business type funds are funds that are supposed to stand up on themselves. They don't need appropriations from the governing body, such as solid waste, utilities. They have fees for services, versus governmental funds are your items where the city council, the city is devoting specific money, such as federal money, tax money, and other money to support those programs.
Thanks for adding to that to clarify the question.
You did a great job, Clayton, as well. I had it there, but thank you, Raul, as well, for weighing in. I appreciate that. I believe those are all of my kind of more high level questions, again, I really look forward to diving into this more. And then I'll be diving into the document more over the next few days. So I may have some additional questions there, but again, thank you so much, everyone. This was a lot. This was a lot in regular years, and this has been anything but. So I really can't thank you enough for the incredible amount of work and dedication that you have put towards this. And I know that the finance team, actually, you guys are often kind of in the background and but so crucial to everything that we do, but you're not frequently front and center. So I just really do want to take the opportunity, while so many of you are here, to recognize the work that you do on so many of the important initiatives that we have in the city. And we really can't go anywhere without y'all. So thank you so much for your work here and that you do across the board.
Councilwoman Romero Worth.
Thank you, Mr. Chair. I would just, well, a couple things. One, I want to just make a quick comment about directors or people who are doing multiple jobs. I don't think that's anything that they are happy about or that is what we want. I don't think on the executive side or on the legislative side, which is something I seem to be talking about a lot, that this is something that we want long-term. I think it's just kind of the nature of where we find ourselves, trying to find the talent pool that we need to do the increasingly professional and needed work of the city. And so I know that these are things that we will begin to correct. And I think that we will see that going forward. So it's not ideal. It's not something I don't think any of us want to see. And I think these are things that as we emerge from this crisis in our community, in our world, we will begin to see corrections. I also wanted to just take a little bit of time to kind of echo some of the questions that have been asked by my colleagues. I think, I think it's important to look back about where we started. When I was elected 3.5 years ago, I ran on the McCard report and getting our financial house in order. And I think since I have been here, the team that is here tonight has been working under incredible circumstances, as we have heard, to get our financial house in order. And I don't think that's anything that happens quickly. These are things that take time, as I think Stephanie Woodward said, under the best of circumstances. And we clearly are not operating under the best of circumstances. A global pandemic is not an ideal time to be facing some of these challenges. And certainly, I would almost call this a perfect storm, right, of everything that has been described tonight about really the circumstances that our staff has been operating under. And to come through with an unmodified is the right way to say it, right? Unmodified audit. It is a pretty big deal. And I think maybe looking back at the history of the city and, how things have played out over time will be interesting context. I guess I want to, I guess I would like to hear, and maybe it's both from Stephanie and from Director McCoy about, sort of where we started versus where we are versus the trajectory of really being in a place where I think, as Stephanie put, our external and internal audits come together so that we are really functioning at the highest level we possibly can. And if you could just maybe take a minute to offer a few more thoughts. I really have appreciated what you've said so far, but maybe talk about that a little bit more.
Yeah, thank you, Councilwoman Romero. You're so spot on that this has been a perfect storm. Not only the perfect storm, during the pandemic and with staffing shortages, new system, and Director McCoy having her first baby and going out on maternity leave on top of it. So everything that has been thrown at us, the staff has stepped up and has done an incredible job under Director McCoy's leadership. And you're right, three and a half years ago, the McCard report in August, September 2017, was pretty bad. I mean, when you talk about the number of findings, I don't have the number, but I do know it was 34 pages long. So not only was it 34 pages long, but it was every item in that report was significant. And I think it would have been a much longer report if more money or more time would have been focused on it. But, they had to stop because they were limited in terms of the budget. But what it did, it gave us a starting ground, right? It exposed a lot of these issues that honestly were decades old. And it really gave us a chance to say, okay, from this point forward, everything that we do is going to be an improvement in the qualification of the staff, the improvement of the systems, the improvement of all the processes and the controls, even the improvement in the external audit, right? They even pointed out that the external audits were inadequate, right? Because the external audit didn't highlight any areas. There had not been a change in the external auditor. There was a propensity for potential fraud in that area, just because when you don't change auditors very often, everybody gets kind of comfortable. So really, when I came on board, right, I had no idea. Right? I remember, and actually, Councilor Romero Worth, you actually are, you used to attend our meetings religiously when we would meet in person. And I don't know if you probably saw my face a few times when I, was first on board, and I was like, whoa, okay, this is exciting though, because there's a lot that we can do to rebuild and really match, the ratings that Santa Fe has as a top 10 city in the world, right? I'm proud of that. As you know, this is a volunteer unpaid position for me as an appointed official. I have spent numerous hours, I don't know, over the last 3 years, because it's an honor to serve. And as an auditor, solving these problems, I mean, this is what we look for, right? And like I said, I feel very confident that the past is behind us, right? We recognize it. We know what the issues have been. Director McCoy is exactly the right person that you need and the right leader. And I know that there have been some hiccups in staff, but she is building, an A+ team, and they are all committed. And, I think especially during this pandemic, it's been a challenge, but, the city has put their safety first, right? So that they felt comfortable to continue to operate, to not only do the current accounting, but to do the audit from last year and to continue to serve the constituents. And
Did we just lose her?
I think we did, yeah.
Maybe why she comes back. Director McCoy, I don't know if you had anything you wanted to add about kind of the trajectory, where we've been and where we are, the trajectory of the future, and kind of the work you've been tasked with, and living, eating, breathing, sleeping, even on maternity leave. So kudos to you for the hard work you've been doing over the last 3.5 years. But I don't know if you wanted to.
Mr. Chair, Councilor, yes, it's been a pretty long road to get us to where we are since the entire organization, since the 2017 release of the McCard report. It was essentially a fraud risk assessment. So they did outline several different areas where the city was deficient. Since then, the city, prior to my arrival, I really do want to give kudos to the prior administration for taking the time to do the McCard report, for my predecessor and to others that were in the finance department at the time for doing this. It was a significant reckoning point for the city of Santa Fe to really have that Band-Aid pulled off, to lift up that rock, if you will, and really see what was underneath. And since that report, again, even prior to my arrival, my predecessor and the city staff that was here at the time had been working on these systematic improvements, some of which we've outlined for you, that really make the financial accounting and our operations more professional, more transparent, more modernized, and more accurate. I think it's really important to understand that these changes don't happen overnight. To be able to onboard a staff and then be able to train them, not just in a new accounting system that they've never used before, but in the very particulars of CDBG grants or any capital assets, where a significant amount of capital assets that the city has is a tremendous amount of work every single day. And so really, I appreciate the kudos and the gratitude that the council members tonight have shown to our staff who do work, on these assignments and these tasks every single day and put their best foot forward. We have, provided additional training and will continue to provide additional training and supports to our staff, like working with CPAs, like our staff, Tom and Rochelle from REDW, who are here with us tonight, to be able to seek their guidance on how to make these improvements as well. It really is a combined effort to be able to onboard the right staff, to be able to continue to provide training to the staff that we have, and to seek assistance where necessary from expertise like Tom and Rochelle that are joining us tonight. So again, through this direct action, one of the priorities for us, if we just take a look at the last 3.5 years, is implementing the new Tyler Munis system. If there was a really clear through line through the multiple pages of the McCard reports, then one of the biggest deficiencies was the antiquated E1 system. Right. And so to be able to, not have to rely on that antiquated system that did have so many issues with segregation of duties and a breakdown in internal controls at the system level, that's why one of the priorities was to implement this new Tyler Munis system. So it was all hands on deck. Our team, they created the system, they implemented the system, and there were several, trainings that will continue even this week for our staff on how to use the system and how to improve running reports and using the system. So this is just a particular reflection point that we have with the FY20 audit to say, where are we at now after having implemented that system for the first fiscal year? And like others have said, taking those lessons, taking the areas throughout these 21 findings and identifying the right responses, right, on how to very quickly be able to implement the changes that are necessary. So that being said, it really was an all hands on deck process to be able to implement the system, because the system is only as good as the folks that are using this system. Right. So that's why we continue to provide training as well for our staff that is tasked with using this system every day. And the acceptance of the system over the last few years, the system has really gained acceptance throughout the city, which is, a really far, we've come a long way in the last few years. Staff is, increasingly improving in our ability to use the system and to modify the system where we need to, like with the management of grants and the use of Project Ledger, like Ms. Lutero identified for us before. So we're really, at a good reflection point with the FY20 audit to understand what challenges still exist, what areas of improvement need to happen. And then again, as we mentioned, in terms of the corrective action going forward in the short term, we will continue to fill the positions that were frozen, In previous years, we will continue to seek to attract qualified, competent, seasoned professionals into these positions. And we're in the process of awarding an RFP for our FY21 year-end close process to hire in CPAs as well. And that was thanks in large part to the governing body that recognized the need for additional assistance for our team and approved that budget back in the spring for us. So that'll really help us at this point going on into the future to continue to make these improvements.
Yeah, and I want to just underscore something you said that I don't think we came up with tonight. It hasn't come up before, which was the fact that Munis has gained acceptance across the city, I think is what you said. And that is not a small thing. 3.5 years ago, one of the biggest problems was trying to, get the city to accept these new changes, this new process. Having to go through and do things differently was a huge cultural lift internally. And that's something that I don't think you can see from the outside, and what these audits don't really show us. But that point right there is a significant one. And I see we have Stephanie back, and I know she was sort of mid-paragraph. I don't know if she wanted to add anything.
No, that's a great comment. Because I remember the pushback just by doing the three-way match, right? And that was a significant issue with McCard, because when you don't have the system, or because of the lack of a state-of-the-art ERP system, it's difficult to have proper segregation of duties, right? So you open yourself up for fraud. But when we implemented the three-way match, the pushback was huge, right? Yep. Everybody was complaining, oh, we don't have enough staff. Why do we have to do this? This is, not the old way we used to do it. And we overcame that, right? Now it's no big deal, right? People really understand that good governance is good business. And there's a reason why we do certain things in the system, because it's going to protect us down the road. The more that you can push in the system so that the controls are proactive and not reactive, right? We're going to find these things. So yeah, it's no small task, and it doesn't happen overnight, but the culture really has changed. It has been a huge change management process, and the last 18 months during the pandemic on top of it. So like I said, this staff is you have the A+ team with Director McCoy and the entire staff below her. And like I said, I've been all over the world, and I've seen a lot. And this group is one of the best. So I'm very proud of them.
Great. And I guess I'll try to wrap it up. I know we're getting late, and the chair was worried about letting us get into this, even at this quote unquote high level. And I know we have a couple other items. It was interesting to me, Mr. Anaya, that, there was under questioning from Councilwoman Villarreal about the compensated absences. I think that's the way you refer to that, right? And that system that does that. I mean, on first pass, it looks like, we overpaid an employee because we weren't tracking properly. And I thought it was really interesting under her questioning that you let us know that you checked 100% of that, I don't know what you call it, program, system, aspect, area, and you only found one error. Now, obviously, we don't want to be making even one error, but I guess it goes to this point of the nature of these problems, and I think we'll be getting into this, in future finance meetings as we hear sort of what the problem is, how big the problem is, what it takes to fix it. But I guess I would like some comment, and probably from Stephanie and from Director McCoy, and maybe from you, Mr. Anaya, about, and I think you did allude to this, we are on track to fix these things, and you have seen nothing that would cause you to believe that we aren't 100% ready, willing, and able to get there to get these things done.
Yes, you guys are on track. One thing that I agree with your comment is the city management is very vested in this process. They're open to feedback, and I think you heard it when we had different people talk, is taking responsibility and ownership. And as soon as you have that ownership, instead of pointing fingers, you're on a path of correction. And what I've seen, I can't comment if everything's been fixed because we haven't got into the subsequent year audit, but there's been discussions about how to move forward, and those discussions have been positive.
Thank you. And Director McCoy, I know you're 100% committed. I mean, your professional career is part of, reputation is part of this. So I know you to be a very hard worker, and I'm sure this drives you crazy, and you're wanting to see this, and you're wanting your team to get across the finish line in a heroic lift, really.
Mr. Chair, Counselor, thank you for the question. We, I think, as we indicated in your previous line of questioning, this is a particular reflection point in the city's history. Considering where we were with lack of internal controls, lack of a robust and effective external or internal audit function, there have been an increased focus in hiring professionals and working with RADW on the internal audit process, working with CLA on the external audit process to make sure there are, every time we lift up a rock, that there is sunlight to what lies beneath that rock. So we are able to identify the proactive steps, what we like to call a corrective action plan, which is what we're going to be bringing forward to this committee on how to correct for these issues that were identified. Again, I think each one of us that has presented on this call today, and the staff that also stands beside us doing the work, it is our professional reputations. We want to do this correctly. We want to do it accurately. We want to do it right, which also speaks to the fact, to the reason that we're presenting this in October, after the year after the audit, the fiscal year was closed, because there was a commitment by this whole team to have accurate financial statements that were released, to clean up the errors, the accounting errors that were identified, and make sure we have an accurate representation. These are not small numbers. The city has grown immensely since the late 70s, early 80s. We'll also include the level of assets and liabilities from those years to give you a perspective of the growth of this city. And, we talked a little bit about the debt that is outstanding. We talked about the capital assets under management that the city has. These are quite significant amounts, quite significant balances that we are charged with to make sure that we get it right. I think what's pretty impressive from what the CLA team has done is doing 100% testing in that compensated absences, and only having that, a relatively small amount of error for testing 100%. Keep in mind, we have about 1,200 employees, to put things into perspective on that one particular area, that are a pretty small payroll team of 3 manages to get out payments for on time. So that in and of itself, the fact that we have paid everyone throughout this transition process through the new implementation system, and we have paid all of our vendors, is an incredible testament to the level of dedication and commitment to making sure that we continue operations through a pandemic, through a technology change as well, and to, taking very seriously the partnership with the internal audit team. So as they come in and they give us feedback on procurement and accounts payable, or they give us feedback on leases, or they give us feedback in the public utilities and billing area, that we have a partnership to really put forward our best foot and provide corrective action. for each of those areas. So it's not just the annual audit, right? And you all have heard these presentations throughout the course of the last 3 years, as we've looked into each of these different areas and come up with the steps to get to a better system of procurement, a better system of utility billing, a better system of tracking our leases. And for that, I am grateful for the partnerships, again, with our external auditors, as well as the internal audit and the leadership of Chair Woodruff, to make sure we're asking the tough questions, right? Make sure we're reviewing these processes, because that's the only way we get better. We lift up that rock, we make sure the light is shining, and make sure we know what the problems are, because if we don't know what the problems are, we can't fix them. And that's essentially what happened prior to the McCard report. So I think we're in a much different situation now post McCard report.
Thank you. So I just want to say thank you to your staff, to Chairwoman Woodruff, who, as she pointed out, is got many years of experience and is an unpaid volunteer, lending her depth to us as we continue to professionalize, modernize this city, which is, really important as we move forward. So I will leave it there. Thank you, Mr. Chair.
Okay, thank you, Councilwoman Villarreal, and then I know Councilor Garcia is here, and I'm going to give him an opportunity to comment or ask a question or two before we move on. Councilwoman Villarreal.
Thank you, Mr. Chair. Just to follow up, we do have Director Gonzalez in the attendee room. I don't know if, since he's on, he could answer my question about the IT passwords. And while you're getting him in the panelist section, I just had a follow-up question to the ERP Munis. We keep talking about how this is the first year that it's the complete system for Munis, but from my understanding, we haven't actually implemented all the components of the system. And I think Mrs. Lotero said, talked about the project ledger piece that wasn't implemented. So I'm just wondering if that would have actually helped us with, well, twofold, I guess. Would that have helped us track certain things that we didn't anticipate if we would have implemented that project ledger piece? And then, like, what is our plan moving forward with that? Because there may be other pieces that I'm not aware of in Munis that we haven't actually implemented. And is that something that's part of the action plan to implement?
Mr. Chair, Councilor, yes, that's a great question, Councilor Villarreal. We, as Ms. Lotero did identify, a project ledger was not fully implemented during the fiscal year 20. Since then, the staff has been working to essentially onboard all of the grants into this segregated ledger, project ledger, to be able to track, which will essentially make the reporting on our federal grants cleaner and more accurate. That being said, there are other areas. Assets is one. Assets was a finding that Mr. Anaya reviewed with us earlier. We are in the process. We were in the process pre-COVID in the months leading up to March of 2020 to implement the assets module and work order module in Munis. Unfortunately, when the pandemic struck in March of 2020, we put that on pause because of the staffing shortages and because of the other priorities that faced the finance department staff at the time. Since then, our staff has started to work on picking up where we left off in March of 2020 and starting the implementation for the assets and work order module. So that is part of the corrective action plan for that particular assets, finding over the capital assets. That being said, I will turn it, I see Director Gonzalez has joined us. So I'll turn it over to you, Councilor, to repeat your question and to Director Gonzalez.
Sure. Before I go there, I'm just curious, does Munis have a debt management component, or is that the project ledger?
Mr. Chair, Councilor, Munis, the debt is accounted for in our general ledger.
Okay, so we don't use Munis for that purpose?
Mr. Chair, Councilor, we can go ahead and provide a more detailed response to you when we discuss this finding at more length, but all of our revenue in and payments out are tracked in our general ledger system in Munis, is the short answer.
Got it. Okay, thank you. Hi, Director Gonzalez. It was just a quick question about the findings for the passwords. And I guess I was just wanting clarification why it takes so long to, well, I'm trying to remember what the findings said, but it made it sound like we need this extensive amount of time to replace, or I'm not sure the correct wording, but you probably can say more about that, about the passwords that we need to change.
So the City of Santa Fe password length is 8 characters. That's following Microsoft, Homeland Security, the National Institute of Standard and Technologies. Theirs is 8-character requirement. They believe that meets all security requirements and it's easy for users to recommend. The audit finding was recommending that we go to 12 to 15 characters. With that said, the City of Santa Fe IT is moving forward to go to 12 to 15 characters. That'll take around a year to implement because we're moving forward with one single sign-on authentication, which that means a user will have one password for every environment they log into. So that's why it'll take a year. And it's probably number 8 on our priority list right now with IT projects.
Got it. Is that saying that every employee has to explain to me the password? Is that all employees changing passwords, just finance procedures needing
that's
new
an entire
passwords?
city, that's an entire city staff.
Okay.
In every environment, from email to VPN to Munis login to EnerGov login.
Got it. Okay. Thank you. I just wanted to clarify why that took so long, or why that would take so long. That's all I have. Thank you.
Thank you. Okay, Councilor Garcia.
Thank you, Mr. Chair, for affording me the opportunity to speak tonight, and thank you, Governing Finance Committee members. I just want to give a quick thanks to all the Finance Department team, any of the city employees that had a hand in getting this audit submitted. I know this is a huge lift. I'm going to thank the CLA team, Mr. Anaya and his team, as well as our external partners that to get this in. I know, as we've all mentioned, this is a huge lift. The results of the fiscal year 20 audit, they don't paint a rosy or a favorable picture of the current situation. And I'm quite concerned in regards to what I'm hearing from some folks tonight. I mean, Mr. Anaya stated that 21 findings is quite significant. I mean, and I have as well extensive history in auditing, and that is to have 21 findings is significant. To have 12 reoccurring is significant. That's I think it was brought up earlier that we're on track to accomplish them. Well, that could have been said last year, and to have those reoccurring, it doesn't again reinforce that we're on track to accomplish what we set out to even do last year or 18 months ago, however long ago it was. We got to remember that this audit is 8 months late. So I would not agree with the statement that the city is strong, safe, secure, and in order. The 2 late audits clearly demonstrates that. I do got some clarification questions that I just want to kind of quickly go through. The opinion for major federal programs, and this is for Mr. Anaya, it's currently qualified. So that means that we're at risk of losing federal funding because of the extensive findings we had. Is that correct, Mr. Anaya?
Councilor Garcia, anytime you have federal findings or possible qualification of over federal compliance requirements, increases that risk. Will that occur? I can't comment on that, but yes, that would increase that risk.
Okay, so that doesn't sound strong, safe, secure, or in order, in my opinion. I think we keep referring back to the McCard report, and yes, it really exposed a lot of deficiencies that was in the city, but we've had 3 years to really work on it, and to refer back to even some of the findings that were there from 2018, I think, that are reoccurring is just, again, quite concerning to me. I just can't wrap my head around why we're trying to put lipstick on a situation where we should really be taking it seriously. And I don't think we're doing that, in the sense that saying we're in great shape, and we're not. Our audit was 8 months late. That you don't do that when you're in great shape. So another thing that kind of keeps being brought up, and I'm just trying to wrap my head around it, in regards to the timing. And I guess this is probably Ms. McCoy's best to answer this. Fiscal year 20 ended at the end of June 2020. Is that, am I understanding that correctly?
Mr. Chair, Councilor Garcia, yes, that is correct.
Okay, and so a lot of the CARES Act fund, the roughly 16.5 million that we got, we pumped a lot of that. It would be great to get a percentage, because I mean, I would assume it was well over 50%, and I would even say 75% was pumped out in October and all the way to the end of December, which is 3 months beyond the end of fiscal year 20. And so how does CARES Act impact fiscal year 20 funds? I mean, given that it's at some point even 6 months beyond the close of fiscal year 20. I'm just trying to wrap my head around how one fiscal year closed, yet we're trying to say monies that were extended at 6 months later still impact this.
Mr. Chair, Councilor Garcia, that's a great question. I think to have an answer of that, I will try to give you a very brief summary of the day-to-day operations and the work that our team in the finance department and across the city go through. So, and you might also relate to this in your experience with auditing as well. So the fiscal year end for FY20 did close on June 30th of 2020. And there are several deadlines leading up to that 6/30 close date. But after that date, there are a series of processes and reconciliations and accounts that are reviewed, payments, invoices that have to be paid. So for example, for the work that's done through June 30th, we don't automatically receive those invoices on July 1st, which is the next day. Sometimes those invoices take a series of weeks to come into the city, and then we turn around and we prioritize the payment of those invoices to be able to be attributable to the FY20 period. I'm sure you're familiar with that process. That's just one of the many processes that this team that is presented in front of you and our staff and staff across the city go through to make sure that the fiscal year is closed. In addition to that, keep in mind that in FY20, this was the year that the city had a 40% vacancy rate. So as councilors Villarreal and other councilors have spoken to this evening, those vacancies really have impacted our staff's ability to be timely with these processes that I'm describing. So when it came to the award in September and then the subsequent processing through the months of October, November, and December of the $17.5 million in CARES Act money, our staff was processing the still processing the fiscal year end and closing the fiscal year end for FY20. And then that essentially, in large part, we took certain processes took a pause. So for example, our procurement staff had to procure the $17.5 million in a legal manner of that CARES Act money that we were getting out into our community. And so a lot of the operations, whether regular FY21 procurement or the processes for the FY21 year-end close, we had to take a pause in those to be able to prioritize getting that money into the hands of the community for rent payments, for making sure that for childcare payments, for others, to be able to stand up a emergency shelter at Midtown, other priorities, other things that took priority during that year-end close process. So I hope that sheds light on, what a true, year-end close process what we have to go through on a day-to-day basis to pay out invoices, to make sure our bills are reconciled, to make sure all accounts across our 70 funds are reconciled, and then to be able to move into processing that significant amount of federal funds that was time limited, that we did have to get out the door by December of last year. I think Rochelle Cohen with RADW has her hand raised and would also like to further explain.
Yes, thank you, Mary. Councilman and women, yes, I would like to reiterate just with what Mary said. Remember, on top of everything else, the city did receive $17 million and they already had the shortage of 40%. So they were short-staffed and they had to process all that information by December 30th, 2020. So that kind of took into the, preparing for the audit and during the time the audit was going on, as well as taking into consideration that the city did switch over to Munis. That's where a lot of the findings were from the financial statements, is the record keeping recording. There was some issues with recording the information and getting familiar with the system, the staff with the training, so on and so forth, and recording the information timely and into the correct accounts was why the city received some of those findings that Raul went over earlier. Also, one of the biggest things too is that there was turnover in a significant position with the county manager leaving, who had that historic information and released a lot of the PBCs to the auditors, and who was in charge of the various different consultants that prepared these PBCs that the city had previously hired to help with this. So there was a loss of communication there from the city itself to the auditors, and then with RDW coming in to help clear up some of the remaining items. The pandemic had a lot to do with it too, just because the expenditures that they received from the state, but as well as working remotely, having that face-to-face and getting used to the remote working and not being in City Hall, working in the department. Tom, I don't know, I think I picked up everything.
Yeah, you did, Rochelle. Good evening, everybody. One other point I would make is, across the country, with single audit deadlines, the feds have actually extended. It doesn't apply to New Mexico and the city of Santa Fe, but just in general, to give you an idea of what's happening across the country, the feds on their single audit deadlines, they've given 6-month extensions. So, they're giving an additional 6 months for their federal compliance audit to be completed. So that kind of tells you across the country that, they realize that people are, municipalities are having problems. And so they're giving 6-month extensions to get those audits completed.
Councilor Garcia.
Thank you, Tom. Thank you, Director McCoy, and thank you, Rochelle, for the comments. So just for clarification, because I completely understand the reconciliation process, because that's why we get the 6 months. Our fiscal year ends and the audit's due 6 months later. But so CARES Act funds, the 17.5 million, that's all included in fiscal year 20. Am I understanding that correctly?
Right, but I think what I heard, Councilor, was we had a choice due to the lack of staff and do we finish the audit on time, or do we process the CARES Act money because it came in at the right time? Is that correct?
Okay.
Boy, that's kind of what it sounds like to me.
Mr. Chair, councilors, yes, that is accurate, Mr. Chair. I think it's also important to note that the first time the city did notify the state auditor's office was in October of 2020, that we would not meet the December 15th deadline. As soon as that award was made from the State Department of Finance, we then really understood the undertaking for the city with our limited staff, with having to work remotely in a new system, the challenges that were going to occur. And so we made it very clear to everyone with that written communication to the state auditor's office that we were not going to make that December 15th deadline.
Okay, thank you, Chair. I really appreciate that clarification, and thank you, Director McCoy. It does help to clarify the matter. And I think that, again, just kind of reinforces, because I did have some concerns around this, as well as Councilwoman Villarreal and some of my other colleagues, as it was referenced multiple times through the findings, that it was stated that the finance department was severely understaffed. And I think that, to me, in some senses, it could be a reoccurring audit finding. And I think that's to where it was mentioned earlier by my colleague. That is a critical matter that we need to get in front of, like 2 years ago. And I understand the pandemic really threw a wrench in things, but this is a finding that we can't use this excuse of we're severely understaffed. We have to do what we need to do to get people in place to get our audits in on time. And so with that, I really appreciate the opportunity to ask some questions tonight. I know that it will be in front of the governing body soon because I do have some more in-depth questions. But again, thank you, Mr. Chair, and thank you, Finance Committee, for entertaining my questions and comments tonight.
Okay, thank you. We're gonna move on. Thank you to everybody who made the presentation, specifically Chair Woodruff for joining us, Mr. Anaya and Ms. McCoy. I appreciate the job you've done, and we look forward to continuing to hear from you all. Okay, so that brings us to our action items. The consent calendar, item 7A, was a request to approve the acceptance of award terms and conditions for the American Rescue Plan ARPA Fiscal Recovery Funds. Councilwoman Cassette.
Thank you very much, Mr. Chair. I don't know if there was if Rich or Kira or Mary wanted to talk a little bit about this. One of the main reasons I wanted to pull this was we are going to be doing a public engagement process. And I think that it is important that we have the opportunity to talk about that and what that's going to look like. So Rich or Kira, if you guys wanted to spell that out, I would appreciate just having that highlighted a little bit more for the public.
Sure. Good evening, Mr. Chair and members of the council. If I could, Kira, to start up. So Kira and I, Director Cho and I have a short presentation that talks about that, and Director Cho, I can sort of take you through the community and public engagement side. So back in July, I had done a presentation around an overview of what ARPA, which is the American Rescue Plan Act, is about. And the process has gone through a couple of iterations where we've received all our Treasury guidelines and we applied for some recovery funds so that we could bring them in. I think that's a part of your packet. And as we now figure out where this money will be allocated, we are looking at these different buckets, which Director Cho will talk about. So we have a couple of slides, if it's okay to share my screen. I will take you through just an overview again for the public and for just a refresher, and then turn it over to Director Cho. Okay, so the ARPA America Funds Recovery Plan Act overview. Basically, the Recovery Plan Act is a Biden administration law that came into effect around March of this year, and the Treasury went through the Treasury, and the Treasury had to establish guidelines. His overall theme and mission was to respond to the COVID crisis to address the community and economic recovery and resiliency that we were going through. And this Recovery Act allocated $350 billion that would be eligible to states to help them with those two pieces, recovery and resiliency, as relates to COVID-19. The city of Santa Fe stood to receive about $15 million over the course of basically the administration from now into 2024. So the spending is an allocation that is over a period of time. It's not just one period of time, as we had with COVID, the COVID CARES Act plan, where we had from October to December to disperse these funds. These funds actually being dispersed to us, we have a period of time to really look at, address, and react to our COVID-related pandemic related to recovery, community recovery, and resiliency. One thing I wanted to note was that Santa Fe actually is a metropolitan city. So the money, the recovery funds actually will come directly to the city versus a lot of smaller towns that will have to go to the state, and the state will then reissue those funds up to them. Some general use of the funds, which I explained in July, is that supporting public health expenditures, address these negative economic impacts, caused by the public health emergency, replace sort of lost public sector revenue. They call that revenue replacement, recovery revenue replacement. And there's another area where you can look at providing grants for premium pay for essential workers who have been affected by the pandemic, who had to leave their place of work because they didn't have any money and they had to go home and they were COVID positive. Other areas are invest in the local water, sewer, and infrastructure for the future. And this actually can be tied into what's coming ahead, hopefully, is this infrastructure, Jobs and Infrastructure Act that the Biden administration is working on. Again, some allowable uses. Currently, the Treasury guideline says that there are certified census tracts where the funds could be allocated. We're trying to get some more guidance around that. We want it to be citywide, but we need to figure out if it's just census tracts only, or can we do the whole city? And then that's direct aid, community and economic development, infrastructure recovery, as I said, the expenditures are tied to a sense of equity, address racial disparities, address inequities. A perfect example of what we feel is inequity is that we are working on a public Wi-Fi program for our underserved communities so that we can cross that digital divide. So some of this funding, hopefully through either community development or a bucket that would come to economic development, that we could use to make sure that we continue that process and we have the funding available to not only do it in the south side districts of the community, but we have some midtown area districts of census tracts that we like to address it too. So that's just an area where we see this crossing the digital divide and providing some equal broadband access to our citizens as they deal with schools in and out of school, et cetera, or kids who are trying to learn at home and trying to catch up because they really spend a whole year at home. Some ineligible aspects of these expenditures are pension funds or legal settlements or matching grants. You can't really use this money to add to a federal grant that you apply to. And this last section here really is the framework, and it's talking about how the U.S. Treasury is sort of measuring what you're doing. So I sort of translate this Treasury speak to say, what's the problem you're trying to solve? Who are you trying to reach? Where are you going to allocate this? And how would you measure success? So when I look at these frameworks from the U.S. Treasury and how we will have to measure it to send back to them to make this launch eligible, is that those are the areas I think would be translated to us locally. And so with that, I'm going to turn it over to Director Choa. She's going to talk about the community engagement aspect of what the funds will do. So Director Choa.
Thanks, Rich. Chairman and Councilor Cassett, we are committed to doing some community engagement on how we spend our ARPA funds. Obviously, we want to also get the funds out the door. We have longer to spend them, thankfully, than we did with the CARES funding. But we know there are some acute needs in the community right now. And so it's a balance really between doing some community engagement and meeting some acute need. We have contracted under a small purchase agreement with Cerise Consulting. Kathleen Dahl from Cerise is here. She's one of the team members of Cerise. Cerise helped us with our CARES Act project, both in keeping good accounting on it, as well as doing a thorough evaluation of those that were impacted by that funding. They're also helping us with our Mayors for Guaranteed Income program, and we've been very happy with our performance. Rich, you can, I'll let you know if this slide lets you know that they're a Santa Fe-based consulting firm.
Excellent.
Yep. So we did look at how other entities around us have done community engagement as a bit of a model here. As some of you may know, the city of Las Cruces held a 10-day public comment period in which residents could mail, email, or phone in ideas for how to use the funds. That put the onus on the residents to get information in, but it did also include 2 in-person public input meetings with interpreters. Santa Fe Public Schools, which their rescue funds are funds, but essentially similar parameters. They held 3 town halls in July, 2 were in person and 1 was virtual. And then they also conducted a survey, which if you're a parent, you know that, and they had a good response, about 43 respondents. In the county, our partners at the county didn't do a formal public engagement process, although they did present ideas to their Health Policy Planning Commission from the Community Services Department. Their meetings are public. They have a leadership team, which I participate in on behavioral health. And that team is made of providers that hosted discussions on use of ARPA funds. The county, as we have in the city of Santa Fe Community Services Department, have since the very beginning been in conversation with all of our providers and connect around the community needs that they are seeing, and their staff prepared budget requests then vetted by the county manager. They presented to the county commission, and they, as may know, have approved the ARPA budget for the county already. Next slide. So this tells you a little more about Cerise. I mentioned in the first slide how we have worked with them and how we are working with them currently. They really do bring an expertise in project management. They're very rigorous about their evaluation, and they continually have underscored the need for community engagement that is meaningful. They have a really strong value in elevating community knowledge and needs, and really have focused on really capturing and conveying the voices of people in the community. I'm particularly thinking of the evaluation that was done on our CARES funding, which we talked about in the previous presentation, what it was and what it meant. And I actually want to take a moment to thank the finance department for prioritizing putting funds for rental assistance, food assistance, childcare, transportation that actually kept some people alive in our community in the fall over finishing their audit in a timely way. I know both are important, but personally, I just wanted to interject that and say thank you. Because the community absolutely needed what Cerise was able to help us do as well. And so that's why we leaned on them for this engagement. The project manager, who's not available tonight, but will be next week at council, is Molly Parsons. And with us again tonight is the evaluator and data manager, Kathleen Dahl. And then I'll go to the next slide. So what are they going to do for us? We proposed and have contracted them to work with us to create a brief survey, which is in the works in the draft form right now. It'll be a 10 to 15 minute survey. It'll be a Likert scale with multiple choice items. And that the survey will be in an online format in English and Spanish. It'll be piloted first, and then it'll be open. The current proposal is, or actually contract states it'll be open between October 15th and October 31st. And then the dissemination plan for the survey is co-created with us at the city, but will be the primary driver of the survey dissemination, similar to what we've done out of constituent services, and Christina Helsick will help us with that. To incentivize completion of the survey, we will offer a raffle for those who can get a gift card, and City Attorney Erin McSherry agrees that this is allowable. So hopefully we'll get some good engagement because of that. Next slide. That's phase one. And phase two, we'll have some listening sessions. One on October 19th, we will have a plan that we work with them with Cerise to create around how to get an invitation out. That's going to be an online community listening session. And we'll do it in the evening on a weeknight. We will present some ideas briefly for our expenditures, but mainly create a forum where the public can really give its input with some understanding of the parameters of the ARPA funding. The Cerise team is going to record, transcribe, and analyze the session. And then also at City Council, we can take public comment on ARPA spending on the 27th. And the Cerise team will attend the session to take some notes, which would be sort of a freer form, although shorter time period for people to give input. And then we're happy to supply, the Cerise team is happy to supply you all with some simple framing questions if you want to ask questions during the listening session. You're of course going to be invited to that listening session on the 19th. That is a flexible date if we need to change it, but we want to put that on the calendar for now. After that session is complete, Cerise will again analyze notes and transcripts for themes relating to community needs and ideas for expending the ARPA funds. And then the final phase, next slide, they're really going to spend some time analyzing and reporting out on what they found from all of this, and then have a comprehensive report that can be available early December. This will allow them also to present findings to stakeholders at the city and participate in discussion about solutions and next steps. So that is our intensive community engagement work that we intend to do with Cerise. And next slide. This is getting away a little bit, Councilor Cassett, from your question, so I don't need to spend too much time on this. We have been in conversations, as I mentioned, with our providers, with our community partners. We have identified some ideas from our departments, divisions and departments of things that we'd like to see. And here on this slide, you'll see some of those ideas. But again, this all depends on what we hear back from the community during the community engagement process. And with that, I can answer any questions.
Okay, Councilwoman Cassette, you had pulled this and started with the questions, and then Councilwoman Villarreal.
Wonderful. Thank you so much. And thank you, Kira and Rich, for that presentation, and Kathleen for being here. I really appreciate you guys putting the effort into the public engagement. I think at this point, I have one small question later for Bernadette, if you're still, Bernadette, yes, you are still here. Wonderful. More of a comment as we're putting this together, and this might be something for Ms. McCoy. This came out of actually a conversation with Regina about our different funding sources. And one thing that I really want to be cognizant of is, knowing that these are one-time dollars, that we're really looking at how do we leverage these for investments. And there's going to be a lot of, I believe, needs that come in from the community, a lot of suggestions that come in from the community. And one thing I want us to be really aware of is sometimes we get, excited, we have this big pot of money and we have a lot of things that we can look at, but what are other funding sources that might fund some of the needs that are coming through with the community, and how we can utilize this public input as we start to look at budgeting for FY22 and as we started looking at some of our other budgeting processes. And also making that very clear when a proposal is coming forward to us for how we allocate these ARPA dollars. If there's something on there that rated really high from the community engagement, or if there's something that rated really high with the community engagement, but isn't on the proposal for the ARPA dollars, because it is better suited from a different funding stream, I really want to make sure that that's very clear, so that, because I think a lot of times we'll get kind of this feedback for pots of money, and that it's better suited somewhere else, but we don't really explicitly talk about that. And that's both helpful for the larger public, but also I think for us as a governing body, Mary, you're in this every single day. And so all these different fund sources and these revenue sources and these potential opportunities for dollars, and really seeing the larger picture. So that's something I just want to make sure that we're really aware of as we are looking at how these dollars get spent, is that it's a big windfall. And I want to make sure that we're really investing wisely with these one-time dollars, and that if there are other funding sources that we really think about that and really vet that out while this proposal is going through. So yeah, I do believe that's my only comment. I guess just you mentioned with Christine and advertising and how we'll get this information out. Are we working with our community partners, with the Connect network? How can we really make sure that this is getting the attention that this is occurring and that there's going to be the opportunity?
Mr. Chair, Councilor Cassett absolutely really answered the question within the question. So we'll work with all of our partners in Connect. We'll work with constituents. And I know there's a lot of these funds in the community, so I don't anticipate has an extensive network through the economic development groups. So I don't anticipate that, people have been waiting for us to be talking about this. We'll acknowledge. So we're doing that. We're ready to come out and ask for input, and we anticipate getting a lot of it.
Okay, wonderful. Thank you. I appreciate that. And then Bernadette, if you are here, Director Salazar, I had one quick question as I was reading the memo there's one requirement in there that we follow the drug-free work policy that is set by the federal government. And I was curious about some of the changes that we are looking to make with the legalization of marijuana in the city, and potentially looking at some of our requirements and how that might impact our ability to utilize federal dollars where marijuana is still not legal at the federal level. So I don't know if we have an answer for that. Vern, you there? No? Okay, well.
Mr. Chair, Counselor, what I can tell you is we will abide by the terms and conditions that are outlaid in the agreement that's before you today for a vote. So we are able to take advantage of these funds. I'll go ahead and meet with Director Salazar and get you a specific answer to the question as it relates to any changing HR policies.
Wonderful. Thank you so much for that. I appreciate it. Those are all my questions tonight. Thank you both so much for being here and for the presentation. I know it's a longer than usual finance committee, so I greatly appreciate you staying so long to provide this information.
Councilwoman Villarreal.
Thank you, Mr. Chair, and thanks to staff for listening to me, because I've been asking about this for months and really was excited to read about your plan for outreach. I think it's going to be helpful and useful for all of us. And so I'm excited to see this is moving forward and that we have a team to support us with the consulting team. But one thing I just want to, my colleague mentioned this, and just to reiterate about the Connect clients, not just the network of the people, the navigators, but the clients, if there's a way that we can actually connect them and get their opinions about what is needed through funding sources. I don't know if you've thought of that already, but the actual clients.
Yeah, Mr. Chair, Councilwoman Villarreal, that's a really great point. Besides just, inviting them to participate on an online survey, which many of them may not have capacity to do, I think what we can do is ask our navigators to share a survey with them while they're working with them. And so that would be a way to really get that input that's so vital.
That's what I was envisioning, not making them do another level of surveys. So just so you know, Kathleen, we don't have great responses all the time from surveys. I just think it gets lost in the mix. There's too many things people are responding to and working and whatnot. So that's just one piece. But if there's ways that people could administer it through already connected pathways, I think that's important. Through the navigators that connect, I think would be important. And I think you already mentioned this, but we have current grantee partners that probably have a lot to say about how they'd like to see the funds being utilized. And that's the Children and Youth and Health and Human Services grants and their grantee partners, as well as CDBG, the Affordable Housing Trust Fund recipients, and then our Midtown community partners that are already in play. So all of those, I think, are already a captive audience. And I'm sure you've already thought of that. I think it's just, that would be an easy way to get some input, because they have a vested interest and they're on the ground working with clients. So I think that's important. And then I had the same, I guess, just an opportunity that my colleague, Councilwoman Cassett, brought up about making sure we're leveraging funding sources, because we have this infrastructure stimulus bill coming. I'd hate to use these funds, ARPA funds, for something that could actually be used with the infrastructure bill, if that passes. And then just other opportunities that we're thinking about for GRT bonds, et cetera. I'm just wanting to make sure we're covering all our bases and that these ARPA funds are going towards the quickest, most efficient need to get people funding to support during this time. And I guess I was just thinking about, what is that? Sorry, I just lost my train of thought. Hold on, let me think about it. What was that? I'm forgetting. Sorry, I'm getting tired. I think it's just making sure that we look at all our resources, like my colleague talked about. There was one other thing, but I'm not remembering. Oh, I know what it was. I guess I was thinking about into the future, the guaranteed income project. Since we have funding that came to us this year, but next year we're going to have to find a match, that I was curious if this funding could be used for that purpose.
Mr. Chair, Councilwoman Villarreal, I believe it can for direct relief cash relief. And so we'd have to make sure that the finance director and the legal looked carefully over the guidance. Director McCoy, do you want to speak to that a little bit?
Mr. Chair, Counselor, I think that's an excellent question and a really immediate need of the community as well, and a program that's already a good example of how these dollars can get directly into the community very quickly. So we'll have to circle back from first glance that would be an eligible use for these dollars. We'd have to circle up with Marcos Martinez for his legal opinion on that. But from first glance, it does look like this would be an eligible use.
And actually, I'll just add to that, the county has set aside funding for that purpose. They looked at what we did with our CARES funding and direct cash relief. They didn't do that, but they liked it. And so they did budget ARPA funding for this. So it is a late hour. So I'm sure that they looked at it carefully. We'll do the same. And we definitely are looking at Connect as a way to push that funding out in a manner that more stimulates guaranteed income than simple one-time, one check relief.
Right.
That are still not have still not recovered, really need a little extra overall. And so that would be a great model. We're excited that the county has devoted $1 million to the direct cash relief out of their ARPA funding to partner with us and Connect.
Excellent. That's great. And I'd be in favor of that, using guaranteed income match next year, because we'll have a heavy lift. We won't have that partner anymore infusing the majority of the funding source that they did this year. So I'm just thinking about next year, and we can't necessarily assume that all nonprofit and foundations, local foundations, are going to be able to make that match or be able to provide us with all the funding sources. So I guess I was just thinking of the leveraging aspect, and I would love to know more as you all look into that, because I would be in favor of supporting that. And I think that's it. Thank you. Thank you all.
Councilwoman Lindell.
Thank you, Chair. One quick question. What's our contract cost for the public engagement?
Mr. Chair, Councilor Lindell, $20,000.
Okay, thank you.
Okay, what is the pleasure of the committee? Councilwoman?
Chair, could I just ask one follow-up on that?
Sure.
What's the time frame from when to when?
It was contracted, I believe, officially this morning.
This morning, yeah.
And we'll go through the end of December for them to fully compile their findings and do any follow-up with us that we require.
Thank you.
Councilwoman Romero Worth.
Move to approve.
Okay, we have a motion.
Second.
And a second. Any further discussion? Now have a roll call, please.
Councillor Cassett?
Yes.
Councillor Villarreal?
Yes.
Councillor Lindell?
Yes.
Councillor Romero Worth?
Yes.
And Councillor Beta?
Yes.
Thank
Okay,
you.
that item's been approved. And now we are on to item 7B, which is a resolution supporting offering at least a wage of $15 an hour for employees of the city of Santa Fe and directing the city manager to offer hourly wage increases for all full-time, non-probationary city employees paid less than $15 per hour. Councilwoman Cassette.
Thank you, Mr. Chair. I just have a couple quick questions on this one. First of all, so the title did say all full-time staff members. Are there any part-time staff members that would that are making under $15 an hour that would not have their wages increased based on how this is currently written?
Mr. Chairman, Councillor Cassett, I don't know if you can hear me. I'm having some problems with my system tonight.
Here,
I believe that there are some part-time employees. The way that the rule reads, according to the resolution, is based on a current city policy that specifies how additional compensation can be granted for this purpose. So we can take a look at that, and I can go through the listing and determine if there are part-time employees and how many it would affect, so we can address this, because the idea would be to ensure that they would receive the compensation as well.
Okay, that'd be wonderful, Vern, if you could do a little bit more research, and I would definitely be in favor of making sure that this impacts all of our employees.
Mr. Chair, Counselor Casa, I do have a very quick answer to your question that yes, there are several employees that are on this list that are part-time. And we'll go ahead and get you a more official numbers associated with the positions and the full-time versus part-time status of that.
Yeah, that would be great. And then the additional information about how we can ensure that, you know, looking into part-time individuals also receiving this wage bump. There's also was a mention of individuals who could fall off the fiscal cliff, which, you know, essentially really looks at making just a little bit too much that they lose a lot of money in aid dollars, whether it's SNAP, is it SNAP here? Food stamps or, you know, other types of federal assistance programs. And I'm curious if we've assessed this and how we might be able to address this. Could individuals essentially refuse a wage increase if it would actually cause a negative impact to them fiscally because of the loss of those dollars?
Mr. Chairman, Councillor Cassett, yes, the way that we've designed this is the increase would, if approved, would be implemented, but an employee, if it would be detrimental to other benefits, then they would be able to opt out of it.
Okay. And is there, thank you. I'm very grateful that we've done that. I know that that's a really big problem with a lot of these programs is that fiscal cliff. They get a small wage increase and it actually makes things harder for them. And something that I hope is addressed at the federal level, if anyone's listening. But I also, do we have the support system within the city? Would HR be able to assist individuals with making that assessment? Because I know that when you are looking at these complicated numbers, it can sometimes be challenging to see how these things might impact you. And so I'm curious if we would be able to provide that assistance as we are discussing this with individuals that would be impacted.
Mr. Chairman, Councillor Cassett, we often do an analysis for employees currently when asked whether it be for retirement purposes or other benefits that they're currently receiving. And we can do an analysis on their current compensation. So we could help them to the extent possible.
Okay, and then that's wonderful. I'm glad that we can give them some assistance. And then would we be able to refer them to, gosh, it's I know getting through at the state level is also really challenging where a lot of this work is done. But that's maybe something I want to think about a little bit as well. If there's, if we can only take them so far in that assistance, how we might be able to work with some of our partners who have a lot of knowledge in this area. Because again, I really want to make sure that nobody is negatively impacted by this that's supposed to be a financial benefit for them. And then my last question has to do with this conversation that we've had in different areas looking at salaries and wages with the issue of compaction. And will this be causing that compaction issue? And if so, how are we going to address it?
Mr. Chairman, Councillor Cassett, thank you for that question. That's a really good question. So when we analyzed the employees that would be affected if this was approved and then took a look at their classifications, we would see not an actual compaction, but salaries that are very, very close to two particular classifications, and that's the transit driver series and the parks maintenance workers. So the difference would be about 50 cents from a parks maintenance worker, for example, and a parks maintenance worker senior. So with the transit drivers, we are working with the department for recruitment purposes aside from this whole project, but we would be addressing that either with the department for recruitment and retention initiatives But also, as Mary mentioned earlier this evening, we were funded for a new classification and compensation study. So that would also be addressed through that process. And we've started the process to get that going under the RFP process.
Okay. And Bern, do we expect the class and comp study to be completed and something that we can be really implementing when we are passing next year's budget, the FY22 budget, right?
Yes. So the hope is that it would be completed before decisions are made before the next fiscal year's budget. So if there's, so that would be 23. So if there was additional funding that would be requested, that would be presented at that time for possible approval, similar to the way we did it back in 2018.
Okay, wonderful. Thank you. I appreciate that. I don't think I have any other questions, and I look forward to getting some more of that additional information on those topics. Thank you both.
Thank you.
Councilwoman Villarreal.
Thank you, Mr. Chair. And I actually had the same questions that Councilwoman Cassett brought up. So thank you for that. I think that you covered that, most of them. The only thing I was wanting to find out is to be able to address the compaction where you have people making close to the same amount once they bump up to 15, and how that would affect people that are in a senior role from them and only making 50 cents more. I'm just wondering, so all these changes would take place for fiscal year 22, correct?
Mr. Chair, Counselor, yes, that is correct.
Okay, so with this analysis on compaction, whether it's through the class and comp study, I would like us to plan to have a certain amount of money set aside so that we can look at those differences and be responsive to possibly bumping up other people that are close to those folks moving up into the $15 range. Does that make sense? To have like a fund or an amount of money that we can anticipate so that we can actually start looking at some of those other positions that are too closely compacted with the other positions we're increasing. Does that make sense?
Mr. Chairman, Councilor Villarreal, yes. And this would definitely be something that the class and comp study would evaluate. I'm sorry, I got cut off again. I'm having problems with the system. So I don't know if I heard all your questions, but I think I heard the last part.
Yeah, I just wanted to make sure that we're planning for that the request for the amount for this increase, we're actually thinking it's going to be more for various reasons. For one, the part-time people that we want to look at, part-time employees, and also the potential of having to bump up people to pay them because they're in a more senior role.
Okay, yes, then I did get the question. So we would be looking at that through the class and comp study, yes.
Okay, so is that did you say it would be completed before we start going into budget hearings?
That is the hope, yes. So we started the process for the RFP. So that's a big contract, as you are probably aware from the last time around. And so we're starting that process. We believe that because of the approval of the last classification and compensation study, we're on the right track. So I don't think that it's going to be I hope that it's not going to take as much time as it did last time. And it'll be a little more efficient because we're not playing catch up by, decades. It's from 2018 till now. So
right.
It'll be more efficient.
Yeah, I definitely think we have a baseline to start from. The one thing they didn't implement was analyzing the pay equity, gender equity pay component. So I'm looking forward to that being analyzed this time around. Otherwise, I'm supportive of this initiative for this resolution and just want to hear more as it works its way through the committee process. Thank you.
Councilor Romero Worth.
Move to approve.
Second.
Well, motion and a second. Any further discussion? Have a roll call, please.
Counselor Cassett,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
and Counselor Abeyta.
Yes.
Thank you.
Okay, so that item is passed. Now we are on item I, request for the approval of an agreement between the city of Santa Fe and Davenport Construction Management LLC to repair and reconstruct the bicentennial pool, $1,948,419.42, including New Mexico gross receipts tax. Councilwoman Villarreal.
Thank you, Mr. Chair, and thank you, Sam, for being patient with us and sticking with us through this long night. Just a couple of questions. I'm happy to see that we're moving forward with this. I think it's important and it's challenging. I just think there's a lot of pieces, especially that there's phases that need to occur for this to get completed in its entirety. So I just wanted to understand more, Sam, if you could tell us the timeline or the time frame of approximately how all these phases would be completed.
Absolutely, Mr. Chair, Councilor Villarreal. The three phases you're referring to, just so everybody understands, we've broken it into essentially demolition, reconstruction of the pool, and then a final phase that'll address some pool amenities and updates to the pool building itself. The reason we've broken it out primarily is because we really would like to be able to open the pool on time in the spring. And to do that, we feel it's really important that we begin the demolition as soon as possible. Once the pool's demolished, there is soil testing we need to do to ensure that there aren't any kind of complicating factors created by the amount of water we've lost there, and be able to prepare the site. That contract is kind of being executed simultaneously. We hope to have a signed version completed by tomorrow, and we'd like to have a PO issued on that as early as Wednesday, and then having the contractor starting in the next couple of weeks. Because of the, it's an important process, the committee and council review, but because it does take a little extra time to be able to, vet contracts and get approvals, we needed to move quickly on that. And then the final piece was just because of, I think many vendors like the city have shortages on staff. We've had problems pricing out some of the final items on the building, and the project manager assigned to that task is still working through the process of pulling all those prices together. And we just, again, didn't feel like we had the time to wait and really wanted to get the bulk of the project moving as quickly as possible so that we can do our best to kind of honor that spring deadline for opening the pool.
So Sam, to follow up on that, you're saying that demolition will probably occur in the fall?
Yeah.
And be completed in the fall, winter?
Mr. Chair, Councilor Villarreal, absolutely. We're hopeful that we can get started in the next 2 to 3 weeks.
Okay. And then you think reconstruction would happen, like what time frame that you're shooting for?
Time frame for reconstruction is going to be late winter, early spring, is my understanding. It's very much, because a lot of the work is concrete work, it'll be kind of determined by weather conditions and our ability to mitigate that.
Okay. So then the next phase was, I call it the amenities piece. That's going to happen later, or as the pool, like, are you envisioning it happening when the pool's open and we're doing it? Maybe just explain that a little bit more to me.
Absolutely, Mr. Chair, Counselor. What we're actually aiming for is to have an amendment ready and reviewed by committee and council and executed and able to be implemented as we're wrapping up the final phases of the reconstruction of the pool. Yeah, if that makes sense.
Yes. Yeah, I feel like there's a little of unknowns about that, but yeah, I just want to stress the most important pieces that we need to get done versus the cosmetic stuff. So
absolutely,
I think that's important. The one other question I had about the contractor has an outline of the costs, and there's these line items that say GC markup. I think that's general contractor, maybe.
Correct.
Markup. And some are, I mean, they're pretty, what's the percentage? Do they all follow a certain percentage what's the percentage markup? And what does that entail?
Yes.
What does
absolutely.
it signify?
Mr. Chair, Councilor Villarreal, we struggled to find a pool contractor in our region qualified to take on this project. The one contractor we did find, Westcon Construction out of Albuquerque. They've constructed many pools throughout all of northern New Mexico for several decades. We were not able to contract with them directly, so we're using a general contractor on a state price agreement to kind of work as our prime on this project. And that's kind of where it's kind of almost akin to kind of project manager at risk, where we essentially brought on Davenport Construction Management and have worked through the scoping and pricing of this project with him. And he is actually working as our prime contractor. Westcon, Leisure Pool, and several other kind of pool related contractors are working under him. The state price agreement allows us to do that and allows general contractor to bring on subs and stipulates that the rate at which they mark up the work of any sub would be 10%. So that's per the terms of the state price agreement. If that long-winded answer, I think, but I got there eventually.
No, that made sense because basically our general contractor, Davenport is not qualified for all aspects of the work needed. So they're going to be subcontracting, and that markup is 10% across the board. Is that
correct?
Accurate? Okay. That's all I have. Thank you very much.
Okay, other questions?
Move to approve.
Second.
A motion and a second. Any further discussion? Can I have a roll call, please?
Counselor Cassett.
Yes.
Excuse me, Counselor Villarreal.
Yes.
Counselor Lindell.
Yes.
Counselor Romero Worth.
Yes.
And Counselor Beta.
Yes. Okay, so that brings us to matters from staff. Ms. McCoy.
Mr. Chair, no matters from staff at this time.
All right, matters from the committee. Councilwoman Villarreal.
Thank you, Mr. Chair. Just a quick request from staff, just so I have a better idea of where we're at. So we've had projects lately that are being covered by the fiscal year 21 GRT in excess. We keep talking about that term. And there seems to be a few projects that are being able to be funded through that. And so I'd like to understand that better, like what that excess amount was and what we've actually, how it's been prioritized in terms of projects we've been able to fund through it in the most recent couple months. Because we've heard it just through committee process about where the funding source is, but we actually haven't had a presentation about what that actually looked like after the fact. And so I just want to get a better idea of what that looks like, and if any part of that excess amount is actually replenishing our reserve, because I know we used part of our reserve for our last budget. So
Mr. Chair, Counselor, those are excellent questions. We will prepare a presentation. So you all are caught up to speed on the tally for that.
That'd be great. Thank you.
Of course.
That's all.
Okay, matters from the chair. Our next meeting is Monday, October 18th, 2021. With that, we are adjourned.